Good morning, good afternoon, good evening. Yes, you've all been waiting for us, and we've been waiting for you. Yes, we have. We'd like to welcome you to TopstepTV for opening call. Congratulations. Yes, you are at the right place at the right time. We have an exciting, informative, and educational programming for you today. And today and throughout the week, we will be your trading buddy, your trading mentor, newscaster, fellow trader, and even sometimes that ray of sunshine that hits you just right, letting you know it's going to be a great day. A little corny, John?
Maybe a little bit, but it's always good. You're a ray of sunshine in the morning, Eddie, every day.
Yes, it's just really cloudy here in Chicago right now, but get yourself ready. We're ready for some top-notch, up-to-date market and trading knowledge with my good friend, Jonathan Hoagland, a.k.a. The Hoag. What's up, Johnny?
Morning. Good morning, Eddie. Good morning, everybody. Welcome to the opening call Tuesday, September the 19th. Always, our focus is accurate context, good risk management, and remaining patience. I already seen a couple of comments in the chat here. Looks like Shaw Cunningham has picked the next band name that I'm going to have, and it's Lacey and the Gremlins. Thank you very much for that, wow. Shaw, and it's great to see everybody, and always great to see you, Eddie. How's it going?
It's good. A little cloudy here in Chicago today. A little rain here, but that's why I sort of needed a little sunshine on my day. So we're sharing the sunshine here at TopstepTV. We got lots going on here today. Real quick here, today is a special day. Today, Tuesday, September 19th, we got Jared Tendler coming up here today at 11 a.m. Central. And I think a lot of you know who he is, but we'll get to that a little bit later. But right now, since we are on the clock, stock futures looking a little flatline today. Investors looking ahead of that two-day Fed head policy meeting today. So we'll see what's kicking. Dow futures added about 0.1%, not too much. S&P inched up by about 3 to 0.1%. NASDAQ were mostly unchanged. Now, many of these indices are looking positive, buoyed by the fresh jump in that oil prices. Oil prices, we're talking about ExxonMobil, Chevron, and that was a move earlier this month, of course, by our friends in Saudi Arabia and Russia to extend that production cut. So that's what we've got here going on. But, John, what do you got? And then we're going to come back here. I got some more for you.
Well, yeah, so everybody, I'm sure, is well aware the FOMC meeting begins today with the release tomorrow at 1 p.m. Central. As far as economic numbers today, we had some of the housing numbers, housing starts and housing permits come out. Housing starts actually higher than expected. Permits were actually lower than expected. I don't see any real major reaction in the markets to those numbers here this morning. We do have a 20-year bond auction that goes off at noon today. They're going to be auctioning off about $13 billion in 20-year bonds. We've got the VIX 1409 largely steady. The dollar index holding over 105, comfortably at 105.33, and the yield on the 10-year 4.35 last I checked. It's all going to be about the FOMC. Again, that comes out tomorrow. Really, I'm just kind of be patient. We got an inside day, so we'll take a look at that stuff on the charts here very shortly. Don't forget, not only Jared Tendler today, we have one of our fine coaches. Paul is going to be doing group coaching today at noon. Awesome. His initial focus is going to be on FOMO, something I know we're all very familiar with. So that's also going to be a really good session today. I'm looking forward to joining and watching myself.
Awesome. Paul, yes. Met Paul at our little get-together that one Saturday. That was pretty nice to meet Paul. And John, you know Paul a while already, right?
Well, I mean, I've met him at that too, but we've had a few conversations, and I really like him. I think he's, he's got oodles, of course, of futures experience, trading experience, and I know it's going to be a really good session today. You want to go to that.
Don't miss it. Instacart. You hear about this Instacart initial public offerings, $30 a share. All right, hitting the top end. This is something that new. I'd like to see where this Instacart goes. It's like a home shopping sort of thing. So the company raised $660 million. The sale of 22 million shares So we'll watch that on NASDAQ today. And of course, our crude, if you're looking at it right now, it looks pretty positive, rising the fourth consecutive session as the supply concerns were exuberated by a release of a weak U.S. shale production forecast. So we'll watch that too. And word on the street, there's actually my bookie says there's an 80% chance of a government shutdown in a few weeks. So 80%. Usually they do that, but it's somebody saves the day.
Yeah.
Usually. But we'll see. We'll see if the blender gets turned on in a couple of weeks. But otherwise, let's get busy here. Let's get to our charts with Mr. Hoagland's expertise.
All right. Well,
what you got, Johnny?
We always start with the daily here in the S&P. So yes, this is the daily chart. We're looking a little bit further out to begin with, as we usually do. And we see that the market is still remaining in a coiling type of position. It's lower highs, higher lows. We looked below last week's low yesterday with a degree of rejection. Volume, very weak yesterday. Take a look at the volume. Why is that? Well, FOMC is Wednesday. A lot of traders are just positioning themselves or hedging in case something unusual happens and there is a volatile period. So a lot of folks in protection mode in the equities. The open interest for about 430,000 contracts expired and will settle in cash. Yesterday, the December open interest lost about 1,300. So no real position changes as far as overall outright positioning, but a lot of folks, again, I believe, positioning themselves for protection for whatever happens at 1 o'clock tomorrow. It could be a non-event. We don't know what's going to happen. As always, we say it a lot here, ACH, anything can happen. So a lot of folks just kind of keeping themselves protected. One of the things that I'm interested in is the fact that we've got our trend lines converging with weekly kickoff lines. We've got the convergence today to the downside. We've got the convergence tomorrow to the upside. Overall, we're still relatively range bound, still kind of in the rollover range. Rollover is now over for the equities. So we'll be able to get a lot cleaner and clearer information from volume and open interest moving forward, starting tomorrow. The trend lines, weekly kickoff levels converging. That always kind of piques my interest. We'll see if there's any price action in and around those areas today and or tomorrow. Take a look at the 30-minute chart. All right. Oh, hang on. Let's scale. All right. So what do we have as far as overnight inventory? Maybe we're starting to get a little bit short. Maybe a little bit of response from the starts and permits numbers. The one that kind of freaks me out is that the drop in permits. They were looking for 1.44 million new permits. It was at 1.283. So a pretty big miss on that. And we'll see how the markets are going to digest that. So earlier this morning, no real overnight inventory. The market is continuing to try and push to the downside. A little bit of rejection here yesterday, although it's not a very strong low. In other words, there was not a lot of excess on the low here yesterday. We tested it. We're testing it again now. So maybe a little bit more interesting morning than I'm thinking, because whenever we open outside of the day's range or we create a gap, that offers, I think, some bigger, earlier opportunities. So we'll take a look at that in fast markets here in just a little bit. As far as the profiles are concerned, yesterday was a normal variation day, neutral, kind of a repair day. We talk about the market opened below these high volume nodes from Friday. But once it went inside of it, the measured move would be to the high volume node in this upper distribution of volume. And that's exactly really just all that happened yesterday. A little bit of change going on here before the open. We'll check this out again in fast markets in just a few minutes. Eddie, we're going to move on to the NASDAQ here.
Giddy up.
And it's not, there's not a huge amount of difference here in the NASDAQ compared to the S&Ps. Again, starting with the daily chart here, we've got a look below last week's low yesterday, which was also kind of convergent with the trend line that we're looking at. 1, 2, 3 basic points of contact, a little bit loose there, but the market is still attempting to stay in this coil. If we do find legs to the downside of the NASDAQ, the target for me will be the weekly kickoff low, which is 15,200. And if that's the case and we continue below that, then I think that there's more legs that we could see to the downside. But overall, we're still relatively range bound. Volume yesterday, again, very low. A lot of traders on the sidelines are just positioning themselves to protect against volatility, potential volatility tomorrow. We added 4,100 in open interest. So there were some bets placed yesterday. And I'm thinking those bets were probably to the long side because, well, longer time frame traders are hedging, shorter time frame traders looking at the low here from last week. It's held. It held yesterday. Does it hold again today? Only time will tell. Take a look at the 30-minute chart here. And we will see what we're looking at here. So in the S&Ps and in the NASDAQ, so far, we've got an inside of regular trading hour range. So there's not a big change in the perception of value, maybe getting a little bit heavy here. We'll watch and see if there's any kind of gap opening. Yesterday's opening range was the low of the day in the NASDAQ. So we can kind of make an assumption because price action throughout the day moved higher that open interest increase was shorter time frame longs, new shorter time frame longs. They're getting squeezed right now. If we take out yesterday's low, we take out last week's low, it may be enough to kind of squeeze them out of the market and have this market can continue to push to the downside. Of course, we will be seeing this in real time on fast markets here in just a few minutes. Overall, my expectations, if I have to say, my expectation is, what did we do yesterday? We know FOMC. We had a narrow range yesterday, small range, smaller opportunities. Take profits when you have them. Try not to marry anything unless something seriously changes, and be prepared for tomorrow. I think that's what the trading community in all time frames is really focusing on. And we're not expecting any change in rates, but should something unusual happen or Chairman Powell will say something strange, then things may change in a heartbeat, and a lot of folks are going to be kind of protecting themselves from that. As far as the profile is concerned, it's a normal variation day. Point of control is centrally located. It's neutral. So it would make sense for the market to go seeking new levels, as it used a lot of participation and trade facilitation yesterday. But again, it is waiting on new information.
Right. Hey, John, real quick.
In the day time frame with the opening range, the low of the session. Go ahead, Eddie.
Now, I was going to say, yesterday we had a little difference between our S&P and our NASDAQ. Usually they're running the same. We're seeing that today. What do you call when our SMAs are all above the market? Usually we see them below, holding a market up. But now we've got our simple moving averages all above of where we're trading. What is that an indication of?
That's an indication of a downtrend, right? So we came off the highs last week. We've, in essence, been kind of trending lower. And this is on the 30-minute chart. So you got to remember that it's not the daily chart, it's the 30-minute chart. But with the moving averages holding above price, you're looking at a potential or in a current downtrend.
Okay.
Right.
Thank you, John.
Mm-hmm.
All right. So, Crudy.
I always have to say so crude now.
So crude. Hey, another thing too, real quick, I just want to interject. We mentioned the Fed, the way we talk about it. Don't be afraid of it. All right. It's part of trading. Some of you newer traders like, oh my God, the Fed. It's going to give us opportunity. It's going to move our markets for us. So we'll keep an eye on that. But what do you got in the crude on the daily?
Well, obviously, I mean, we still do not want to fight this move to the upside. What do? We actually lost a bunch of open interest yesterday, but it's part of rollover. We gained open interest in the November contract, but we lost overall. Again, we're still finishing rollover. So there were a couple of kind of questionable daily bars here, although they were overlapping higher, a little bit of lack of confidence perhaps up against last week's high. Obviously, that confidence has changed now to the upside. $94 is the measured move. It's the weekly kickoff high. The November contract, I mentioned there was an addition to open interest. It was 9,100 contracts. So overlapping to higher volume. Of course, that's still kind of a function of rollover, but it is saying that buyers are still willing to pay higher prices to move this market higher. And that's what rallies do. That's what trends do. If you see volume and open interest continuing to increase at higher levels, you don't want to fight this, and you don't want to fight this move to the upside. That said, Eddie, the market loves to make a liar out of me. So again, anything can happen. But we do have the API this afternoon and EIA also tomorrow. So we've got a pretty decent upside move started here in the day time frame here. Let's take a quick look. We've got overnight inventory to the long side. We have a gap on the open. No real attempt to close the gap. I'm looking for opportunities to see this market to continue the move to the upside. I'm looking for opportunities to buy weakness in this market if I get the opportunity. One of the things we do want to kind of keep an eye on is the Dan'l. Dan's channel here is coming across right about here. We're getting pretty close to the upper end of that channel, which does offer us potential opportunity to limit risk in and around that area, in and around the high end of that we call them Dan'ls, but they're channels. We held here, we held here, we held here, we held here. Are we going to hold here is really kind of the question. We got the low end of the Dan'l is all the way down here. We're going to just extend that a little bit. So we're still holding the upside structure. Eddie, your question about the simple moving averages, look where they are. 100, 50, 100, 200. They're below price, and we're showing the continuation to the upside. So everything is coming up. It's seemingly roses for crude. You just have to wonder, where is this market going to end up getting too long? And a kind of an interesting area is this trend line. The next level would be 9,400, the weekly kickoff high.
Well, I mean, crude is strong. It's been strong.
Yes.
We've seen that, and I forget who yesterday, was it Chevron or somebody saying, hey, we're looking at $100 a barrel. So we'll see. We'll see if that plays out.
And when they tell you that, you should probably believe them. The problem is, rarely does it ever go in one line all the way to those levels, right?
Right. But, like you said, expect the unexpected. Anything can happen.
Anything can happen. Here's our gold. Which I'm, liking the long because we tested the low end of this. We rejected. The rotation should be to the high end of this pattern, which again is another convergence between this trend line, weekly kickoff high, and the 100 session moving average. This looks like a very interesting area to target and for a potential opportunity. When we saw the 30-minute yesterday, we saw that we put in regular trading hours, an island bottom. So let's take a quick look at that. And I know that there was a question about overnight inventory.
Yes, I was going to ask you about that Right. I got it.
Yeah, we'll get to that here in just a second. So here was that move down to the low end of the I call them pennant patterns or triangle patterns. There's that move to the low of it. So it gapped, ranged, and gapped away. This creates an island bottom, which can be a very strong reversal pattern. Well, look what's happened ever since. The market is continuing to move higher and higher. Again, this convergence of weekly kickoff high, which to be precise is 1965, and that trend line, very interesting. There are going to be eyeballs looking at that, and if the market is holding to what traders are looking at, then price is likely to go there. So we open with a gap. Now I want to go back to the CL 30-minute chart here because I think it's showing the best overnight inventory at this point. So our settlement price is all the way down here at 90.58. You see it right here. It's the yellow line. The market opened at 5 o'clock last night, right about here. Well, almost all of the price action overnight was to the upside. So you can make an assumption that our weaker hands, shorter time frame overnight traders have been piling into new long positions, looking for continuation to the upside. This, my good friends, is overnight inventory. And if they don't get what they're looking for, and these are short time frame traders, they are very impatient. If they don't get what they're looking for, then they're going to bail out of those long positions relatively early in the session, which gives the smart trader the opportunity to either take advantage of that price action back to the downside. You don't want to marry that, but it also offers opportunity if you're looking for areas to buy weakness. Sometimes that overnight inventory will offer you those opportunities. So, again, these are contexts. These are hypotheses as to things that might happen. It's up to us to be able to respond to those hypotheses with a proper strategy. And if that strategy works, that hypothesis continues to work, you continue to trade that strategy. So we have, again, crude oil up here near this trend line, up here near this channel high or the Daniel high. We've got overnight inventory to the long side. It would make sense if we don't see buyers continue right off the open for the market to have some sort of a pullback as our overnight inventory reconciles those positions, gives us back to better trade locations for an opportunity to continue a long move. This also, an interesting opportunity up here as well. All right, I hope that that kind of talks and explains a little bit about overnight inventory and how I look at it and how you can use it as an early opportunity. Because again, you got a lot of weaker hands longs in here if they're not getting what they're looking for, and that is, instant gratification, continuation to the upside. They tend to bail in mass in a community, and they bring price back to lower levels for those of us that might be looking for those opportunities to buy those weaknesses.
All right, John, before we call it a little timeout here, Ryan's asking, do we not consider 8 o'clock Central Time the market open for crude?
Yes, we do. Unfortunately, for some reason, this platform has the opening at 7:30 for crude. So yes, you are correct. This is not presenting as correct. This is the opening bar right here.
All right. We're going to take a pause here real quick. Coming up here, we've got Michael Patak, and we will be having our fast market, and we'll see what opportunity the markets give us. So we'll be right back here. And we're back. Surprise. Look who we brought. Michael Patak. Good morning, Mike. How are you?
GM. How are we?
Stretch it up. Stretch it up.
I know. Like, I feel a little tight. I didn't meditate. I meditate in the shower, Eddie.
Let's turn down a little more there, Michael.
Wow, I'm hot.
Breathe in and out. Take a deep breath.
So how do you keep the incense burning in the shower?
I use those
opportunity. We got opportunity here today. Markets are moving for us. Lock and load. Let's see what happens here today.
Get those horses ready. Get those horses ready, Eddie.
We got those horses. Yes, and top of the minute. We're lining up the horses. Be careful! Don't step in that. What was that?
Giddy up! That's a horse.
Yeah, horses do that.
Oh, okay. It was a bean casserole last night.
That's time you've been to a farm, Eddie, or a ranch.
I need to get to a farm. All right.
Here we go.
Coming
John,
up in about a minute. Go ahead.
Yeah. Johnny, help me out. I was in the car so I missed the first 10 minutes. 15
Got it.
minutes.
Oh, I'm sorry.
On your own then.
Got a minute.
Get those horses.
So,
all right. Inside a minute here.
We're on our overnight low. It's last week's low. It's yesterday's low. Basically, here's yesterday's low. Regular trading hours, 15,343. Overnight low the night before last, 15,330. Our current low here, 15,345. Interesting area here. Overnight inventory has grown to be relatively short. I'm not looking at a big overnight inventory, but if we can't continue below, we may see a pull back into the range from yesterday. No gap, really, as far as we're looking at here, just about ready to open, right?
Yeah, 60% long NASDAQ, 70% long
S&Ps.
What'd you say the level was up here?
And they're off.
Well, we got last week's low, which is 15,352. You got yesterday's low, which was 15,343.
15,343.
We're through that now.
We're through the 50s. 15,343.
Yes, that's yesterday's regular trading hour session low.
343. That's interesting. Okay, guys, it's interesting because it was yesterday's trading. It was yesterday's low, right? Right.
Yes, and the market found buyers right off the open yesterday at this level.
Yesterday's 343.
Because the opening range was the low of the session yesterday. We're right back to it.
I just put on 100 light, John.
Boom.
All right then.
There you go. We're done.
Let's dive right in then, huh?
No.
There you go.
Start off. Hey, that's what we always like to do is like start off small, get a little toe, get the dip the toe in the water.
Okay, the opening range is now the high of the session in the NASDAQ.
Opening range is the high of the session. Okay, that means a lot. Last week,
Seller control right now.
seller control. I'm looking for 35s now.
Big old wick in the crude right now. Big pullback here in the crude, coming off its highs.
Big pullback in the crude. Is it
Overnight
X?
inventory adjustment. We were just talking about that, Eddie. Here it is.
65% of folks are short NASDAQ. 52% are long S&P. 76% of crude oil traders are short. 74. Here's my 35s. Sold 2. Oh, sold 4. Okay, now I'm out. So I'm short 2
Okay.
from 35.
So the high of the opening range, 15.3, 356. 15.356 is the high of the opening range.
15.3. Well, that's where my stop is, John.
Right, and you're gonna have a lot of company there as well.
Okay, then we're
If we get there,
I just
it's
covered.
still a valid trade.
I just covered. I'm looking for better entries. High prop trades. High prop trades, John.
Okay, the opening range is neither the high nor the low in the S&P.
I know.
S&Ps have opened with an open auction. I'm going to try and stay patient.
What would you say, 53s?
Yes, 15.356 is the breakout above the high of the opening range.
53, 56. Okay.
Now, it was still a valid trade.
It's still a valid trade. I'm gonna find a little bit better entry. There it is, right there. I sold 4. That's fine.
My.
I sold 37s and got out of 41s, and then I got 38s. But I just want to get. I don't like my stop where it is now. My stop's back at 6. My stop's at 63, so I'm a little bit more okay with that stop being at 63.
Yeah, because you've given the market a little bit of room to take out all the stops that are just below that.
I am those guys. The guys on the Cryon 348 even, short from 348 even, 15 348 even, 15 handles the upside is my stop.
Hey, John?
Yes.
Brother Rick is asking, where's the VWAP?
Here, we've got it.
Brother Rick, you got to put that on your chart if you want it.
So there's VWAP is right here. 395. Rick is big into the VWAP.
Boom, got it. Okay, so I'm up $350. I was down 200. I'll scratch that really quick. Got back in on a better entry. Now I'm up. Would have gotten roughly stopped out. Maybe, I think. No, maybe not. I forget how high.
Well, see here. I'm going to show you on this platform. This gold bar here is the opening range. It's the first minute of trade. Initially, the market broke to the downside, leaving the opening range the high of the session. What happens sometimes is a lot of traders are taking that opening range trade. They're short right here, and their stop is just a couple of ticks above the high of the opening range.
Let us know prices because it's a little small, so then we can follow you.
Sure. So you got the high of the opening range here, 15,355. The market broke below the opening range first. A lot of traders were probably short here at 15,335. Okay. So what they do then is they put their stops the other side of the opening range, hoping that the high of the opening range remains the high of the day. The algos and HFTs will seek out those levels because they're well aware that there's going to be a lot of stops there. So they'll seek them out. They'll put offers in there and get the better trade location. Right?
Yeah.
So when we popped up above there, I said, if your stop is going to be right there, you're going to have a lot of company. So you got better trade location. You moved your stop further away. You got a short. You made some money on it.
In out. Yeah. In out of the gate. Glad I didn't hold it. I would be taking heat on it. Sometimes, like again, bang bang, and then you'll get into like another one. But this is me, guys. I don't know. You do your games. And how you do your strategy. You better have a strategy. Or else you just go to the casino and play red black. Always bet on black. Isn't that what Wesley Snipes said?
Passenger 47?
Passenger 57?
57, yeah.
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 You got it.
Yeah.
No, my roulette numbers are 8 and 13. Paid me
It
last
is
time I
because
was
you
there.
you hit them.
Yeah,
Or you hit which one? Which one did
it
you
was
hit?
13 on a
Yeah.
$20 bet. That's a $720 win.
I can't believe
Yeah, I
it.
think
Okay.
everybody's got a roulette number.
John, I
Special
like the
number.
short side up here. Where's these stops going to get flushed out? All the way up to 63
Okay,
ish.
the opening range stops are stopped out.
Okay. All right. I might get on here for a little something if I get a little pop here. Get a little pop. 53s. Give me a little pop.
So you've got 352, which is last week's low.
I sold 350s, John.
Okay.
Last week low 350. So I just got in a good entry, Michael. Sort of. 350 half. 13,350 half.
Nice entry.
Jack, I'll share my screen. So I'm in that one. Okay.
Well, once again, crude from that top of that wick coming in the second 30-minute candlestick, getting a little heavy here right now. We're moving down here in 91.40 last year in crude.
Yeah, Eddie, that's that overnight inventory we were talking about. Soon as we get down to about here, all of this overnight inventory will be reconciled. They'll be out, and the market will start possibly looking for an area to base for potential longs. I mean, if we're going to go with the trend, we're looking for opportunities for longs. How about the 50-session moving average?
John, is this going to run down? John, what's the? It's okay. It's a good position entry, but given all the 72% of folks are long right now on the S&P. Just a little heads up. 62%.
I don't know what they're doing because it's a very small range. It's 5.5 point range. There's just not a lot of info here.
Anticipation.
You're all right so far here in the NASDAQ.
I'm right here right now. It's dancing around my entry. If it dances around my entry too long, I get this little unsure of the position because I'm like, if it's such a great entry, why is it letting everybody get into it? You know, like that's a little bit of kind of, I don't know if it's the right philosophy, but I like being the only ones that kind of it hangs around that entry for a short period of time. Okay, now it's going my way a bit. I have this little. No, I'm not going to talk about it yet.
Yeah.
Okay, so short from 350 half. There it is. Thanks, guys, for putting that up there. Not worried about too much because we talked it out. So I could even go grab a sandwich right now and still feel okay. Because I got my auto OCOs in. Those that don't know, those are bracket orders or whatever you call them. I call them auto OCOs. Order cancels order. So automatically when you put you get your entry, it puts your brackets in. So you guys call them brackets.
Hey, Mike, Rick's asking about your target cover.
Oh, 15 handles to the downside, 15 handles to the upside, 35 half, 335 half, 335 half, yes.
About 10 more points.
About 10 more points. I probably could have taken it there. Now it's kind of coming up to my entry, so it's going to give me a little bit of a Willies.
The Willies?
The Willies.
Willie Randolph?
Willie Randolph.
Where's your stop?
15 handles up from 50. 65, I'm assuming.
There you go, 65. That's
What do you got up
there? High.
Like now it hasn't made my move, and I got a feeling it's gonna do a couple of things. Go higher, go lower,
or nowhere.
Or I think that's technically a little impossible, isn't it, John? On the markets, because it can go up a tick. That's somewhere.
Yeah, anything can happen. ACH.
Anything does happen. Yeah. Okay, so everybody here could have got in on that re-entry or gotten if they liked following another trader, which I never recommend. You could follow me, but I'd never recommend that either. But if we're going to talk out trades, that's teaching a person to fish, and we're all teaching each other to fish. I got like a sneaky feeling of just like scratching this because now it's hanging out here. It grew legs.
And Mike, BB Keller's asking Mike, do you like more quick trades in and out?
I like trades hitting my profit targets.
There you go.
And 15-point profit targets in the NASDAQ, I would say, are pretty quick.
They are pretty quick. See, that's why I didn't want to stay in this position. It hung out there, and then it just stopped me out. But the point of the story is like another 72% longs. People are getting long. Longs are getting paid. Longs are getting paid. Johnny, you notice how, like I said, it grew legs?
Yeah.
And then here's the legs. So when it dances around my entry, I don't like that unless it's just a quick little dance.
Right.
Little shimmy shake.
Yeah, we're all more comfortable when a market like moves our way and keeps us in profit, right?
Yeah. Now I'm down 300, which is whatever. But
you know, when Michael talks about fishing and fish and so forth, it's give a man a fish, he'll eat for a day. Teach a man to fish, or a woman, and they'll eat for a lifetime. So. That's the premise behind that, is that, a lot of traders seem to say, hey, you know what, do what I do and you'll be successful. But the thing is, you're not learning anything. I call it coattailing, where you're just sort of going along for the ride. But if this person sort of, you break contact, the question is, can you trade on your own? So that's the premise behind that.
John, while Eddie was talking, I got back in.
You're short again?
I'm short from 62, 362. But I'm not. This one, if it even tries to dance with this again, I'm out. But it's like I just got stopped out where I like it. The longs at Topstep, to me, I think are being a little aggressive. And I think it did a little extension from what you were talking about. It ran some more of those stops that maybe moved their stops. I just got filled and back up $300. Okay, nice. So so extended, and we talked about running shit up here, stops, and then it did, and it created that wick that we're looking at. Look at your 5-minute wick. I don't like 5 minutes, but look at your 5 minutes. 81% of people are long right now.
Long right now.
Watch. This is the tilt. Bam, bam, bam. If it had an alert, blah, 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 blah. This is the tilt. Watch it. What happens? 81% are long right now. 75% in the NASDAQ. Does the market pay these folks, or do they pay the market? Put your trade on accordingly. I know what I'm going to like doing. If it gets back up to the 58 area, 60 area, I'm going to get short again. But it's still a little bit further away from there. But I pretend as though I had my trade still on, and it's going to come up to it and probably try dancing with it again. And everything, guys, everything's a flexible bias here. And I say that because like 75% of people are biased right now that it's going to go higher in NASDAQ. So I use the word bias because I have a flexible bias. Maybe I want to join these folks because it's going to grow legs again. But right now, I'm not looking to do that. Honestly, like I'm looking for a better entry. But I don't like getting back in. Okay, hold on. 55, 58. Give me up to 55. Up to 55, so I'd take that. That's a pretty good deal, I would think. There's your 58s. There's your 55s. Got a feeling.
So you had 4 trades, 2 winners, 2 losers. What's the commission? We looking still at 300?
Yeah, give me a second. I got short right now 35 or 55s.
55? Okay.
And I don't, I got out of 2 of them. I got short 4, but I'm out of just 2 of them. Still short from 55, 75. There's your, longs are getting paid, folks.
Well, yeah, you got, you think about where we're at here. Overnight inventory is short.
Oh, shit. I had a working.
Well, you know what? It took a while before we did see those longs sort of paying out.
Yeah. Okay, so the longs, I got stopped out, but then I got right back in, so I'm short from 62. This is a dancing area. Hoag and Eddie. They like to dance up in the 60s. Dancing just feels like the right word, so I'm short from 61s. I didn't get the greatest entry on my.
Still, you sold a bit of strength. That's good.
I sold a bit of strength. Yes. Okay. Can it? Right there to me ran out of. It's like boom. Ran out of its strength. So you're trading down here. It's just boom. See, I took my target off because I'm gonna let this one run. But I'm actually out right now. All right, I'm back up to $300.
Well, Michael, after that flurry of trading activity, I'm going to put the disclaimer over one more time from the beginning.
Do as I say, not as I do. Hold on. Do as I don't do what I do. How about that?
Yeah.
I'm not here to be your guys' influencer by any means. And I'm just founder and CEO of Topstep with my 2 trading buddies. We're going to be on here hanging out all the time. We have other trading buddies that come in here. This is a hangout for traders, tradertainment. Hopefully you guys enjoy it. At the end of the week, we'll have surveys to say if you were in our shoes, what would you drop? What would you add? What would you remove? Because we want you guys to help it out. You're in the living room with us.
Yeah, don't forget we got lots of good guests. We got Jared Tendler coming today at 11 o'clock.
Do we have that disclaimer in there? As always,
I put it on, and also, there's a lot to read there, covering the bases. Basically, this is not financial advice. The full disclaimer is in the YouTube description. I hope most of you know that. Don't go to someone with an 8-second delay on YouTube and start copying trades. That is not a recipe for.
Jack, if you want to share my screen, I'll just show you, just so everybody knows.
Yeah,
that I'm trading live, and we like to play live trades. Yeah, we like to play the game. There's no smoke and mirrors here at Topstep. Never has. 13 years. We've always backed traders with real capital in real markets. Tag 50s. If ask any other funding company if they know what a tag 50 is. If they don't know what a tag 50 is, they've never taken anybody live ever. You have to have a tag 50 on everybody. Every one of you guys that gets to the funded level and trades live, I have to get a tag 50 for you. Share your information. You're considered a professional trader, all that kind of stuff, which is awesome. Which we have some cool stuff I'm going to be talking about here later. Hey, Wally, what's the deal with Deal? We paused Deal. Deal will be coming back because we're working some things out, but we paused Deal. You could say they paused us too because they're going through audits or compliance. But that's this 411 skinny on Deal. But we've only been using Deal for 6 months or 7 months. We've been doing paying out traders for 13 years. So they're working out their own little kinks over there. They're a multi-billion-dollar company that just grew in the last 2 years. So they're taking on any contractor anywhere, and I think they are working out their stuff, and we're working out ours. And they're great service. Back up into the 52s because they handle all of our every one of you guys. They handle you guys' contracts. They handle you guys' taxes. They handle know your customer. These are all big things that Topstep was always doing behind the scenes. Man, that's a lot of work.
Yeah, it is.
So good luck to any of those companies that popped up that just fund every which one from Sunday, because that's hard to do to manage all those manually. And that's what kind of we're going back to for the time being, because we're able to get them. They're on. We just got to do a couple things to get in their okayness.
Speaking of okayness, Nathan says, hey, I want to step up my game as a trader. It's kind of annoying because I feel lost. I don't know in which direction to look. Well, we got group coaching coming up this afternoon at 12 o'clock with Coach Paul. And that's going to be a great opportunity to ask questions, to see what he's talking about. By all means, we have the group coaching, I think, every day this week. Yesterday we had John, so today our coach is Paul. So make sure you jump in there, and don't be afraid to ask questions. we're always open for any questions that you do have.
And if you do have particular questions you want to make sure they are addressed, email those questions to groupcoaching@topstep.com. Group coaching, one word, @topstep.com. So we can take a look at them. We can prepare for them. Of course, when we have time, anything that's in the chat is open for discussion.
John, I got to jump in here. That was a good sell-off. That was a good sell-off. That sell-off.
Are you still in it?
No.
I'm. Okay. I thought you were holding a short rate,
I was, and I brought myself back up to the cushion. I like to have a $300 cushion out of the gate, and since we're only 21 minutes into the open, I'm okay with that, because like yesterday, days where I get a $300, $600, $800 cushion, and then I go bang bang on the next couple trades, I'll be like at $2 or $3 grand.
Mm-hmm.
If the stars are aligning, as we say, and I don't have anything else on my mind, because again, it's very hard to do multiple things right now. It's very hard to show. It's very hard to then go after the show to work on Topstep, and then it's very hard to. It's not really hard to trade with you guys here, because you guys are fun to trade with.
Got a question here for both of you. See what we got here. Nighty Night is asking, if we're all at of the daily, weekly lows, wouldn't a long make sense?
That's called picking bottoms, right, John?
Well, it would, except for a couple of things.
Well, I'm sorry.
Here's the daily in the NASDAQ. Yes, we are at weekly lows. Yes, we are at yesterday's lows, but this trend line has 1, 2, 3 points of contact. We are currently below it. The target would be the weekly kickoff low. So we have a kind of a balance to breakout type of situation. When it breaks out of the current balance and it finds acceptance, you go with that. You go short into this. So right now we are holding, maintaining time, building volume below last week's low and below this trend line. To me, it looks short. Not to mention that in the shorter time frame, we're looking at lower highs and lower lows, lower highs, lower lows, at least for the last couple of days. To me, this looks like a good short. Now, of course, that can change. I mean, if volume dries up and we've run out of participation down here, then sellers may back off and buyers may come in and to return this market back into yesterday's range. But lower highs, lower lows, we're one-time framing lower. Volume is looking pretty good. I don't like the long. I like the short. And, as long as the situation stays the same, I'll look for opportunities to sell strength.
Nathan, does it? Go ahead, Mike.
No, and then to John saying, if he likes the shorts, I'm like cringing, because I'm like, you do it as a trader, like, damn, this move's actually happening. This is the one I was looking for, up at the 50s and the 60s, the 350s, the 360s. I'm talking NASDAQ. Whenever you hear me talk, I talk NASDAQ. John talks S&P, unless he has the NASDAQ chart, and then he's talking NASDAQ in front of him.
Right. So now, Nathan, does that answer your question? He was looking for the right time to go short. So John sort of broke it down very nicely.
Let me add one more thing to it. Another time to go short. If you want to go short, sometimes it's not great to go short, of course, like after it's already melting down. Gotta have patience. And then in this game, it's so hard to do. Give it a little, see how it's kind of firming up a little bit. There's times where it firms up a little bit and you see a little 10 handle pop, little 15 handle pop. Those to me are still okay to validate that the downside move's happening. But when we see like a $30, a $50 handle pop, 50 points or something like that, that ends up being to me a little tell that it's pivoting. So they call it selling rips higher. If you want to get into shorts on a trending down on a market trending down. I mean, just this would be sort of a rip higher, or sort of. I mean, look, what was our low? 13s. So it came off the 13s. It's at 26. It's 13 handles higher. Maybe it gets to 15 handles higher. Maybe. So that's, just keep an eye on that. I'm not saying where to get in. I'm just telling you, understand the moves of the NASDAQ, because they're not all like 50 handle moves. 85 handle moves. There's like these 15 handle dances. They've danced within 15 handles. This is what I see. You could see something totally different.
Right. Let's
You make me want to dance.
you make me want to shout. I thought you were going to jump into that song. You make me want to.
No, that's like too fast. It's like a faster market than the NASDAQ, Eddie. I don't know if they make a faster market than NASDAQ. And I don't like trading the NASDAQ, guys. I just know all you trade it. So, but the market's a market. So anybody tells me, like, oh, can't do it. It's a market. Yes, you can do it. It's an auction process. Understand it. Now we're back at the 11. So you guys see how I was just talking about it? It was like, it did a little, John liked the shorts.
Get a little pop.
And it did a little pop. Could have got in there. Eddie, who was that asking the question? You could have got in there. And guys, we have practice accounts, so you can jump into anything.
Yeah. Yeah, that's another thing, too. If you're in the program, you got a trading combine, utilize that practice account. I mean, nobody's watching it except you.
Yeah.
Test strategies.
Hoag, you're right on the
downside.
downside. Yes. Hoag, you're right on the downside. I felt like that could have been a good entry that I didn't take. I'm now in this mode right now where I'm like just upset with myself because
you're in FOMO.
I'm in FOMO. So my emotions are a little on tilt right now. I'd be journaling this if I wasn't sitting here with you guys. I need to take a break because the last thing I want to do is keep trading because I just had myself in the hole earlier. And now I got myself out of the hole. Then I put myself back in the hole. Now I'm got myself out of the hole. That was quite a bit of trading out of the gate. And we're not even 30 minutes into our day. So these are all, I'm speaking out loud as if I had a stream of consciousness. I'm probably talking to
right. And you're helping everybody learn. I mean, everybody, to some degree, we're all human beings. We all feel the same things. We all sense sometimes the same things. It's your ability to respond reasonably and with risk control. Risk management is the name of the game, right?
Yeah.
Right. Hey, don't forget, ladies and gentlemen, today at 11 a.m., we've got Jared Tendler. Some of you might know who he is. Some of you might not. Trading psychologist, author of The Mental Game of Trading. And he's going to be with us here today at 11 a.m. Central. And right now it is 8:58 Central. Remember, we go off Chicago time, Central time. So make sure that you don't miss it.
What's at the top of the hour, Eddie? Anything?
We got nothing. We got coming. I think the best thing we've got is 12 o'clock. Let's see here. Top of the hour, unless you're in New Zealand.
20-year bond auction.
Right. I was going to get to that.
Mover,
yeah,
big mover.
I was going to get to that. Okay.
Big mover. Yeah, nothing on the tilt. Hey, guys, let's talk about that tilt real quick. It was 70, 80%. Remember I said 80%?
Longs.
Bing, bing, bing. Longs. The longs had a chance to get paid, remember? They had a chance to take 10, 15, 20 handles out of the markets.
Mm-hmm.
Greedy longs got crushed. That's why good traders separate from bad traders. That's why I created Topstep. That's why we're Eddie and Hoag. We've seen traders get the whites of their eyes. We've seen traders get the greed. We've seen all that. And we know good traders know how to handle those emotions and know how to then take their opportunity, which is traders. Timing. So that's why I like price action. That's why I like then working with Hoag and hearing what he's seeing. These are all very helpful things that I enjoy. Some people like the solitude. That's fine.
So we're just about to start a new time period here. Oh, hang on. So, here's the open, here's the high, here's the low. We're starting to create some volume here. This low volume shoulder, maybe this low volume shoulder offers potential for execution.
Where's that?
Well, we're looking at 15,323.
Yeah, we were dancing there for a while. Yep.
Yep, and that's kind of the area you were thinking. I could feel you thinking, should try and short here.
Right there. Yeah. When we were talking about that pop, when you're like, it's going to go lower. I'm like, yeah, that's hesitation, guys. That's like, I see the pitch, I didn't hit it. And it was a strike, and it struck me out.
And now we're continuing to extend the range.
Yeah, exactly. That's why we use baseball analogies, right, Eddie?
Baseball, sports analogies, anything we have is basically around sports because it's so relatable. I mean, professional sports, high pressure. Trading, high pressure. You know, how do they correct it? How do they go through it? How do they make it better?
Do they have a coach in the dugout that's, Eddie, keep your shoulder up and lay off the curve because you suck at it? Yeah, they should. They do, because I have my trading coaches and buddies like you that help me slow myself down, stay patient. That's also why we wanted to create TopstepTV as well, so then people could kind of find their patience in tradertainment, maybe.
Well, you know, even sometimes, I mean, you've got to be that coach too, not only the player. But I mean, if you're by yourself, you got to ask yourself questions throughout the day. Should I be doing this? You know, and if you don't have a good answer, then most likely you're not supposed to be doing that. Something like revenge trading or emotions.
Can you be your own? Can you learn the most when you teach? Can you teach yourself? I think
trial and error. Sure.
Yeah. As long as you are accountable to everything you do. You know, why did I take this trade? Well, I took this trade because of this. Was it part of your strategy, or did you just take it because you're mad?
Yeah.
You know, get to know when you're doing those things, and you can keep yourself from doing them. I you know, when I'm actively trading, I'm thinking before I do anything, is this in my best interest? Is what I'm about to do in my best interest? And you might catch yourself answering that, you know what? No, it's not. I'm only doing this because I'm afraid I'm going to miss the move, or I'm down money and I just want to make the money back. Those are not good reasons to take trades.
I'm not down money. I'm up light. This would be a kind of a scratch day, up like $200. And that move was so huge right there. It was so huge. And we had it. We read it. We didn't execute it. If you hit it, ladies and gentlemen of the trading community, if you hit it, please put in your Discord, TopstepTV Slack, or your YouTube chat what you did. I want to feel good for you feeling good. Even if you got busted out, tell us that and what you learned. These are all helpful to all of us. You don't have to read
a couple of people who succeeded in the trading combine today. We have Patricia. Just completed the trading combine. Good job. And there was somebody else, BB Keller,
yesterday, right?
Yep. Yeah, he also succeeded. Let's give all of them a nice like for us, huh?
Patricia, what short was that? Give us some little heads up. Almost 40-point move. Yeah, you caught the one that we were talking about, right? Was that a part of your plan, or was this something that we were just chatting about? Awesome. Either way, see at the funded level. Patience. The worst thing I ever see is traders that come out swinging for the fences. We see so many traders bust out like that. The disciplined get paid by the markets, and the undisciplined pay the markets.
Mm-hmm.
Be Great B. What's a tag 50? I looked it up for you. It's a ID that the CME needs to identify trading participants that access and submit messages to the CME. That means your orders go into the markets. So if you don't have a tag, that means you're on. So if you never ask your funding company that you're out somewhere else, if you all went to one, do you guys know what a tag 50 is? If they can't answer that, they've never taken anybody live. Do you want to trade and sim your entire life? You won't at Topstep. I know that. Never created the company to keep people on sim their entire life. Keep people on sim as a transition to live. Yes.
Yeah, it is a hard thing to do, going from, like a random sim account into the trading combine. It's a different decision-making process. Going from the trading combine into the XFA, you can get paid on it now. It's a different decision-making process. Going from that to an actual live account, it's a different decision-making process. It's a different decision, and the way we do it, it lets you stay in, it lets you ease into it, and we're seeing some really, really good success, and that's what we want for all of you.
John mentioned the transition. You go from being evaluated to this, like, you're on sim, but you're able to capitalize on your upside. Your trades inform our trades, the tilt. So we've deemed that data valuable enough that we're willing to pay you a portion of your simulated profits as real money, and you're providing data to the prop firm. That's valuable. That's why that's where we pay you a portion of your profits. And then you keep kicking ass, and we're like, oh, no, hold on. We want you on a live account. So it helps you get your mind and your confidence in a good spot. We used to go straight to a live account, and then you'd see these traders clam up. It's like really going from, hey, Eddie, you're in. Your starting quarterback, Brady, just went down. The big shoes to follow, right, Eddie?
Yeah, I remember when Brady went in. That was the kicker.
Okay, great example. What did he do? Talented folks that are disciplined and focused and understand, have a routine, have a regiment, have everything, and put in the time, can rise up to those occasions, seize them, and become the best god dang person in the league. You can do that in trading, but you got to just change your mindset. If this is just a play around time, fine, it is, but just like don't expect a lot. You can still make something. Not a play around time. I think you're probably going to get smoked on a play around if you're going to treat this like a hobby.
You know what the thing was? It was, taking, like you mentioned, Brady, taking over for Drew Bledsoe. And I remember that year, big card collector. And I had all these, the year they introduced like an autograph in the set. And it was like, I got a Drew Bledsoe autograph card. Oh, another one. I got a third one. Oh my God, this is a great box of cards. And then he goes down, and that was it. You never heard of him again. And I tell you, investment.
Is that is that just ironic? Like the cover of Madden football, it's always cursed. But even though Patrick Mahomes is on the cover, and that he broke the curse, but they always say when you make the cover, when you get like so much fame, then you kind of lose sight of the sweet spot.
Kansas City's not doing too well this year. I mean, they'll come into Chicago here, or I think the Bears are going there. What about the Bears? So they might be getting back on track.
We're talking next season. I got buddies in a text already talking about the number of picks or the picks that we're going to get, how we destroyed Fields, how
it's another card. It's another card I bought a shitload of, rookie cards and Ohio State cards and autographs and.
Yeah, well,
let's go back to trading.
You have an incredible card collection, guys. If we got to get Eddie to talk about, just name the top 5 cards you have, and don't tell people where you have them hidden.
well, the one I got here is the talking about Brady. I got the Brady rookie. So
wow.
Go look that one up. That one's like I shouldn't really have it there, but it is encased. I checked the Brady card out, but I don't know. I got a lot.
You got Mickey Mantles, don't you?
Mickey Mantles, Hank Aaron's. I got a Babe Ruth. I got a Lou Gehrig.
Get out of here. Get out of here.
Gowdy, 1933 Gowdy. That was before Tops and Upper Deck and Fleer.
What's the grade?
I'm going to say probably around a 5.6. Which is pretty good for that. I mean, back in those days, those kids are like flipping them around, put them in your back pocket, slide into second base.
Yeah. Put them on your bicycle.
Oh my goodness. I remember doing that too. Yeah. Shame on me back in the 70s. Yeah. But if you're trading, once I got into the 90s, Topps sort of went ballistic with just printing cards. They're like, hey, we're printing money. Keep printing these cards. Roger Clemens rookie card, you get it for like $20, maybe even cheaper. So, it goes to show you, they were just printing. That's when Upper Deck came out. Ken Griffey card, I think I paid maybe around $80, $90 for it. I think that's sort of, I think I got stooped on that one. But yeah, if you got any questions, I'm the collector. The collector.
The collector. It kind of sounds like
the collector,
like a action movie.
Well, they got the Bone Collector with Sandra Bullock.
Oh yeah.
Yeah.
Yeah. Okay, guys, 50-50 on the tilt both ways. The sisters and brothers of NASDAQ and S&P.
S&P testing weekly kickoff low.
If 4480.
Mm-hmm.
I mean, the fact it's underneath it, the fact it hasn't shown any strength, the fact that I missed all the shorts and we called it, just has me like, I don't know where my opportunity is. I can make up opportunity right now, but that's not smart trading.
We would see if we can't catch a short below weekly kickoff low here. We're building some volume down here.
Where would your entry be?
979.
1979. That's when I was born. That's a good number.
Yeah.
Generation Xer.
Hey, John, question from Amanda. John, what do you think as we're hanging around this weekly kickoff low?
I'm looking at it as an opportunity to limit risk. If we accept below it, the move is to the short side. We've already broken out of a balance area here. We're now testing an important inflection level. So, I'm trying to find a pullback based on this little volume bubble here. So if 44.79, we're about to get filled on. I don't want the market to come all the way back through this low volume area. So the stop's going to have to be probably around 84, 85, 5 or 6 points of risk on this. We just were within a tick of getting filled on this.
You're gonna get it. You're gonna get it. What do you got in the NASDAQ? I'll go short with you. You should get filled right there.
Well, here's the NASDAQ. So, here's the kind of volume bubble here.
Yeah.
The issue is there's, some pretty big risk till we get up to here.
Pretty big risk till you get up to the 14.
From 15, 314 approximately. That's the next kind of high volume node.
Yeah, I see what you're talking about.
Okay, we're filled.
Nice fill. That's good. Here.
I've got just basically a 2-point stop on this. This is not the legitimate stop.
Hey, Jack, we're getting.
I just stuck it in there to have it in there.
Yeah. Jack, we're getting a request by Mike. We should have music. We had music, Mike, on a test. And then people were like, that's annoying. Get it out of here.
Hold up. We had overwhelming feedback from the audience that they did not want music. And when
Mike wants it.
When you want music, you probably want real music, not royalty-free jams. And on YouTube, that is what you get.
Yeah.
I think our royalty-free music.
I like what Rick says, Zeppelin.
Okay, now we got feedback of it, and don't do. Sorry, Mike, man. This is democracy at some point.
You guys are going to have to do some real good trading if we're going to play Zeppelin tracks on here.
We could get a cover band, right? I got one right here. All right, guys, ready? All right.
Please do not do that. Oh, I thought you actually had a song queued up, Eddie.
No. Cover band. There you go.
Quick behind the scenes. YouTube is vicious with the ID tags. We got one about the NBA the other day, and I watched the segment, and it was during Top Quiz, and there was nothing that I could figure out what they were talking about. So, gotta be careful. We'll look into it.
Does somebody actually watch that?
No, they have an algorithm.
We're not good enough that they watch it, huh?
Well, there's like hundreds of days worth of YouTube video being made every couple seconds. So
yeah.
Oh, I know. We scout out YouTubers all the time. Yeah. Okay. So 88 quarters. John, you're short from 79s. The tilt is 50-50, 45 to the long side. You liked it, but if it does the 14s, you're taking heat on your 79s. If it comes up to the 314s,
right? Yeah,
I like a short somewhere around here.
I mean, this is really kind of the area we're kind of looking at. You got a little bit of a volume high here.
Yeah, give me that. What's that?
Anywhere up here.
99s, 96s?
Yeah, 96, 97, 90, 99.
All right, I got short
In
92.
there somewhere. Or just here. I mean, this is a low volume note here.
I did. Not a huge fan of this.
Johnny Hoax, what's your entry?
A 9.2 half. 2.92 half. Right here, right now.
44.99 is my entry.
Thank you.
I'm sorry, 44.79.
Thank you.
44.79.
Yeah, 15.292. 15.292 half. 15.292 half. Now I like it because the S&Ps are on its lows, and the Nasdaq just try to give it a college try. And then John talked about those nodes up there, the volume profile, which is volume at price levels, which is important to know. Why is it important to know? I like my RSIs, and I'm like, well, yeah, okay, cool, have those, but volume at a certain price shows there's a lot of interest, right? I mean, I got there's a bunch of baseball cards being traded, at a certain player, then that's, that's kind of goes back to the thing.
And the low volume areas are areas of rejection. There wasn't a lot of trade to happen there.
Yeah.
So that's why I like to trade up against them. I like to use them as, resistance or support in directional moves. I would call this a directional move.
Yeah, I'm out. I'm up 700 now, 640. But I like that just for a short play, but I'm going to watch you. You're a little more entertaining than me.
That's what I juggle.
I'm not good. I'm not feeling the market too much today, and I'm good up being up 640 so far.
That's good.
Michael, you've been trading for 27. I always do this talk. Sorry, John, I do. But I'm like, I always act like I'm in my own head. I'm like, you've been trading for 25 years. Why aren't you?
No, it's good. We got to hear what you had to say.
Yeah. I share my stream of consciousness. I'd be journaling this stuff, guys. This is what I did. I have journals in my safe at home. Got to put in the time. I'm glad I got out, because now I would have been taking heat on this. See, I do little bits and morsels of bites into the markets, just because I don't, sinking your teeth into something is where I get in trouble, because it's, I am actually looking to get back short. So just a little heads up. So Johnny's 79 still haven't hit. So everybody knows when he was trading 79s, when he got to his 79s fill, we were down at the 90s, 85s. Now he's at 79 scratching. Is this where you're at? Yeah. 08. I'm gonna look for the 14s or the 13s. If it does a rip higher, these shorts were down there with their 15 handle stop or the 20 handle stop or whatever. I'm not rushing anything because I don't really have any strong opinions right now, except feeling like you talked about the 14s. It could.
Yeah, we're back to entry here, but to me, it's still a valid trade. I'm looking for it to really kind of maintain price below that 44.80 level. If it doesn't, there may be another opportunity.
Yeah. If it comes up 14s, 15s, 18s, 22s, 23s, I'll like it there, because the 20s, remember the 20s was the 320s was a number, right? That we liked?
Yeah, that was, we're taking out A period single TPOs at that point.
A period single TPOs.
Yeah, so here's the first 30 minutes. That's A period, right? So here's your 12s, 13s, 14s, your 20s. You're starting to take out those single TPOs. There's a little bit of price bar overlap here. Start taking those out. Look for better trade location.
I'm looking for the 20s. If I miss them, I'm following your trade. That's why it's kind of fun trading with a trading buddy, because if you miss it and you catch it, I don't feel as FOMO, tell you the honest truth. And if you do, then try to give up one for the team, because it's an opportunity making a machine. We see so much opportunity that if your buddy's catching it, it's like him catching a wave, John. We're both trying to surf. You caught the wave. I didn't time it right.
The wave is kind of coming over my head right now, but we'll see what happens.
It's right. You're at the crest. You're at the crest.
Right. I'm in the tube. We'll see if it crushes me.
Is anybody ever here the surfer that's been in the What's it, the tube? I don't know. Like, I'm not a surfer. What's it called?
Like when when a wave kind of comes over them and then they kind of squirt out the front of it.
Yeah, and you got a guy riding his hand along it.
It's pretty cool.
I believe that is the tube.
The tube, inner circle. ICT, man, you know everything. I love it. It's great. I follow your stuff, and it's just like, it's just crisp and clean, and it's like, bah, bah, bah. And I'm like, makes you think. Everything you say, you're a good making people think type of guy. So appreciate you being here. Hey, Cameron should be getting paid anytime now. So hopefully you guys got all that. And ICT, the deal stuff is on pause. We're working some things out. There's a couple things that we're working out with them, but that's a faster way to get paid. But still, Cameron will get an ACH or a wire, just like every old school style. Old school style is like the last 13 years we've been doing that. So the last 7 months we've only been on deal.
All right, it's got 920 here.
Okay, John, it's coming up to your weekly, which you're still at 79 evens.
Mm-hmm.
I'm as you can tell, Nasdaq's a little. No, it's not a little stronger. Feels a little stronger right now.
It does.
10s. Show me 12. Show me 15s. I'm sorry, I'm rooting on a great.
That's all right. That's all right.
I'm rooting myself on for a great entry.
I'm rooting for you too.
You don't. Thank you, but you got your short. I'm just trying to get into your short, just at a little bit better price. But I'm not jumping in right now. I mean, because if I jump in right now, my stop's at 25, and I wanted to get in at 20. So.
All right, I'm going to the next high volume node with my stop.
Where's that?
That'll be it. If it doesn't fly, then another opportunity will present itself. Weekly kickoff low is in the neighborhood. It's right here.
The tilt 50-50.
50-50. There you go, right?
50-50. Hey, let's get a poll. Let's get a poll in here. I want to see if the poll matches the tilt. Right in here, right now. I know when the poll gets done, it's going to be a little late, but I'll tell you where 50-50, it's not like it moves drastically. Unless the market moves drastically, then you see that.
Equities higher or lower?
44% of folks are long. Now, it's changed. Now, John, I would...
You'd probably just get out of this.
It's dancing. It's hanging out. And I always it's giving all the people that aren't any good at picking entries an opportunity to get in. And I think the minority get paid in this business on entries and on thought process.
Well, what about your thoughts that the trade is still valid?
Yeah, that is how you play your game. I know that's how Andre always talks about. If all the things that got you into that position are still valid, stick with it. I do that when I'm getting a better cushion. Now I got a cushion right now, so I may, you're at 79s. I may.
A question coming here out of YouTube from Sean. Can the tilt include people sitting in cash?
Nobody sits in cash here at TopStep. We start evaluating people in SIM, XFA is SIM, and all those open positions that are in the trading combine and SIM. It's just an open position number. John's short one. That would be open position, short bias, 100%. If it's just one person. If it's two people, then you get the.
And John, what's that volume tool you use? Travis is asking.
It's just a different platform. This is the T4 platform, and it's got market profile, and it's got a really vivid volume profile as well. So it's one of the reasons I like it is because it's got the TPO chart, and it also has a really vivid volume profile. So this volume shoulder here is why we're short. 80 even is weekly kickoff. It's an important level to me. So we're short up against this low volume node here, and we're short against a longer time frame level. Now, the market may not accept and continue to move lower. It may decide to reject down there and then move higher. I don't know what's going to happen, but it's just a reasonable risk for a potential move, and just kind of thinking out loud in my mind, I'm thinking, one of the things I thought this morning was we're probably not going to be seeing big directional moves today because it's FOMC meeting.
Oh yeah, I forgot.
So I'm kind of contrary to that with this short, is thinking that the market's going to, continue to push lower, but it is an important level. These weekly kickoff levels are, when we look at what happened last week on it, we got to it, we opened below it, and we cracked.
Hey, John, it's coming up to the 20s. I'm going to get short right here, right now.
Okay.
I'm short 16s. 16 evens. I love it when it goes my way right away. I feel like such a smart guy.
Yeah. Hey, John.
Yeah.
You think we could do a smaller time frame? I'm seeing an upward pressure on a smaller time frame.
Yeah, he's probably right. I mean, here's the 5 minute.
Jack, if you want to jump over to me at some point too.
Now, this is, we're seeing a move in the opposite direction, but it's also a lower volume. It's also narrower ranges. It looks more like a bear flag to me than anything.
So, John, the 20, I liked it because you're valid. Your trade is still valid. I liked it because I stayed patient and waited for a better entry.
Mm-hmm.
I liked it because the 320s was an area.
Now you're out, right?
No, I'm down. I'm out at the 01s. I got short at the 16, so that puts me at 01 on guys. I'm a 15 handle stop, a 15 handle target. Oh shit!
So did you get your profit target?
I'm gonna just get out of one. There you go.
Okay.
I got out of both of them. I'm up 1,200. And then 03 quarter. Yeah, those close. I was 01s. I told you 01s, but I'm like, it still hasn't traded 01s. I don't really feel like being so close that I'm like, that I can miss a trade.
Mm-hmm.
I don't even think I would have got it right now. 01s. There you go. I would have had it right there. Now watch. NASDAQ does these 15 handle moves, these 20 handle moves, barely 20 handles, but like 10 handles. 10 handles is like the dance, in my opinion. It's like really no different than the S&P going like
up. Kind of like the difference between the bid and the offer in the NASDAQ is 10 handles. Jesus.
What? And John makes a really good point. Watch. Okay, we're trading 8 evens, 78 evens on the S&P. Now you just kind of watch. You put a line in the sand, draw it on 4, 78 evens. Where were we at that moment in time in the NASDAQ? And then after the NASDAQ goes 15 handles down, where are we at the S&P? And then it goes 15 handles up. And then you start to get an idea of how these two are moving. Now, John, that was a great short. You're in it still. I'm rooting you on. I made 600 off of it.
Nicely done.
Yeah, I should have held on.
Michael's a shooter, ladies and gentlemen. He's a shooter.
Now here's something here.
I'm boring. I just sit and watch.
I have the fast market. You have the slow one.
All right.
I'm sorry. Go ahead, Eddie.
Yeah, thanks. Saying nice call, Hoag. Took a short, covered at a profit. Love singles. Now, the thing is I hope you understood why he put that short on. I mean, that's the big thing. Obviously, sure, we can just sort of jump in and sort of put a position on that our guys are talking about, but make sure you understand why he did it. That's the big thing. Another thing too is, let's do this as, what's the best chart time frame to trade crude short-term trades? I don't know. We have Danny coming.
Yeah, well, Danny's coming on right now.
Danny is on, I think.
All right.
Well, we forgot to get your entry. You need to come out of the WWE.
I know. Usually we get the whole crude thing, and I'm already on the screen.
Did you watch Monday Night Raw last night, Danny, or Monday Night Football?
Monday Night Football.
Or did you have a date?
I watched a little Monday Night Football. Won't lie. I was pretty pretty run down yesterday, so I was asleep nice and early. Almost slept in a little bit this morning.
Ooh.
Hey, Dan, do you want your so crude?
I think we're well past that at this point.
I think so too, Eddie. I'm sorry about that. He was accidentally already filled in and signed, so he appeared there.
Yeah,
No worries.
There you go. Just step on me.
Good short, Hoag. I hear you make some money.
Well, you can, Eddie, you can actually introduce it so people know what segment we are. A little drop-in. We're in the fast markets, but the drop-ins that we have are some cool cats to come in here and talk about different things. Eddie, I'll let you take it away.
Thank you very much. So crude. Dude, this is about crude. Danny, thank you very much for coming here. And then we've got Danny looking at crude. Dan, what's going on with crude?
Well, yesterday we got information from the Biden administration. They are putting a 50-year ban on some oil lease grants, which I think that continues to impact the directional move of this market. So this morning we continue to see this market rallying. I got a really good trade this morning that I'm actually done for the day. I was looking at it this morning.
Shorted.
What?
Let me guess. You shorted.
No, I didn't short it, Hoagland. I bought this. So this morning we saw the market breakdown. I look at a 30-minute chart. So we saw that breakdown off the open. Off the open, we got a nice strong pop. I think that was based off the news yesterday afternoon. We saw that market rally from right up to 92.40. That broke all the way down. What I really, really liked is it broke right to, what am I looking at there, John, from yesterday? That break. To me, it was a quick buy. We broke down right there. We got to yesterday's swing high, almost down to value high. Nice. I ended up taking along at 90.34. That was my entry point. I liked it. It kept my risk actually pretty tight with value high from yesterday, not too much far down. Again, only risking a couple $100 to take a trade. I like the pullbacks in this trend up market right now. That's the style of positions I'm looking for. I bought 34s. It rallied to 84s. I got out. I locked in $500 per contract on a live trade. And I don't know, it puts me up just shy of $900 in 2 days on 2 trades. I'd say that's a pretty damn good investment, return on my investment.
Yes,
my risk have been like $300
nice
across
job.
The 2 trades. So
Danny, I want to see it because I don't believe you going forward. I got it
right here.
I'm speaking on behalf of everybody, just so we aren't ever talking about trades and you're like, they never took them. I don't see them.
Hold on, I'll tell you all the details. Wait,
by the way, I'm out of that S&P position right now.
Congratulations, Hoagland.
Where'd you cover?
Right about here, 7, I think.
All right.
Made a couple of points on it. It's just it's barcoding. It's really not doing much, so I just got out.
And it's FOMC day. I don't know if we're going to expect a huge sell-off here.
Yeah,
anything can happen, but yes.
No, you got to sit on your hands on FOMC information. Those are the days you got to be cautious.
Oh, I'm probably not trading anymore unless there's a big. I'll take my $1,200 day, my $2,000 day yesterday. These are my winning days, Danny. Did I show you this?
Oh, there you go. I used to do that. I used to sticky note it all up on my wall in my old house. All my days, I would have them sticky noted up there. Nice little motivation.
I like that idea. So the blue ones are winners, and the yellow one's a loser.
Yeah. Is it showing yellow? It looks like
pink.
yellow.
It looks like pink.
Yeah,
that's pretty cool, man.
That was last week. Monday, Tuesday, Wednesday got crushed.
There we go.
I actually put the number that I made or lost. I used to do this.
That's what I used to do.
Yeah, Danny, look at like I'm sweating. This is like I am like this. I get nervous when I trade, and I don't say I get nervous. I get
anxious.
My emotions start going. I'm literally gonna have to change. It's like shooting hoops and getting ready for the game.
Why do you think so many traders have heart problems?
I mean, still be alive.
They all got a heart problem. I'm one of them.
Oh.
It's good to get that heart pumping, though. I mean, you sit dormant. I mean, it's like working out. It's like going playing some basketball. Get that heart pumping.
I got up. I got my workout in this morning. I rode the Peloton. I did some Did some body weight workouts and helps me kind of wake up. Man, I thought about buying this on that pullback again, but I did not. And now here comes the pop. I mean, John, this is what I was talking about yesterday. We can look at we can look at bigger picture trends. We can look at shorter picture trends. The last 2 days, I have looked at just shorter picture trends, really looking for the pullbacks. And I've gotten good opportunities in those pullbacks to get a buy. And I think it's important to note, like, we don't need to look for these huge moves in these trades, but a couple $100, 2 or 3 times in a day is not a bad payout, in my opinion. And if you get comfortable doing it, you're doing it, maybe size up from 1s to 2s, and that couple $100 starts to exponentially grow. So I think it's really important. Like, people wanted to put on a trade a lot. I see this way too often, that they put on a trade, and instead of accepting let's just call it a $500 win, they're looking for a $1,500 win because maybe someone on YouTube is doing it all day long. Right. But their appetites for risk are different. What they're going through is totally different. What you're seeing can be totally different.
Their motivation, their decision-making processes, it's all different.
It's all different. So at the end of the day, I mean, if you look at it and you can say, hey, I can lock in $300-400 a day, trade in one contract, that turns into a pretty good long-term living, or however you want to look at it. As you size up, as you get more comfortable, and then you start to factor in other trades. So not only do I day trade, I have long-term positions that I put on, and I get to do both. And then I can use day trading to offset the long-term positions, and you can kind of start to work it a little bit differently.
Trade around your positions.
100%. So then you can have a long-term bias and a short-term bias, and they're two different things. So I got the short-term hat on, I flip it around. I got the long-term hat on.
Danny, you should preface this. I would never do this if I'm a new trader. I would only do this if I've been trading for a while, because you start to get
That's what I said. Yeah. That's how I started it. Yeah, that's what I said. Over time, you start to be able to learn more, and you can build into these things. So that's what I'm saying. It's like, be okay with a little $100 wins, a couple $100 wins here and there, and start to grow it, and then you can build into new things.
Speaking of new things,
Danny, just for the wire here, I know that Saudi Arabia is a big player here, and we're always watching what they're doing. But I'm not sure if you know that Saudi Arabia's national oil company, Saudi Aramco, purchased Chile's main fuel distributor, formerly known as Petrobras Chile. So they're sort of over in Chile right now. Anything that would affect what we're seeing here, or what we could be seeing?
No, I mean, I think that Saudi Arabian company owns a lot in South America. I think they own a lot down there, so they just keep, building their monopoly.
Okay.
I don't know. I'm going to be delicate with my words here. They're growing, and they have a strong impact on this market. And then yesterday with the news about the 50-year ban on a lot of lease grants here in the United States, that continues to, lead into the same thing, directional moves here. And as a trader, that type of stuff, that's okay from a trading perspective. My firm belief, and everyone hears me complain about filling my truck, part of why I like trading crude oil is crude oil also is kind of what helps pay to fill the truck. So even if it goes against me, if I can make money in a directional move, that's going to help me fill my truck with gas. That's why one of the reasons I got into it years ago.
I sum all that up. Danny trades for gas money.
I trade for gas money.
Hey, you know what I love about that? You know how cool that is? Yeah. You know how cool that is? You go fill up and you're a crude oil trader. That is what I love about this. I was an economics major. I always focused on the economy and like why people do it, why people consume, how they consume. So I wish I would have had psychology as my minor, but that's why it drove me to the indexes, S&P. I was a Dow trader forever, and I was so in tune. And I'm like, man, I'm 8 months ahead of them of people's thinking right now, because you're like, I don't know, the markets are. I
look at it the same way.
Yeah,
I'm not one that I don't like school. If I'm not interested in a topic, I'm not going to put the effort in, and I know that about myself. So if it's something I actually care about, which to me, I care about crude oil. Like I care about filling my gas, and like it's something I think about a lot. And so it helps me be more engaged in this market. I think that's really, really important for anyone trading in anything. You know, you got to have a passion for your topic. Like I do love trading equities, and I grew up in the treasuries, and like I love all of that. And don't get me wrong, I do still trade some of that quite a bit. But crude oil is the one that like I just kind of connected with it. I feel like I can read the tape pretty well with crude oil. I enjoy engaging in it. And I don't know, it's a fun product for me. Yeah. I like it.
GK Engineer, oil report in 20 minutes. No, we got API on the close. API today, and we'll see what happens there. So
yeah, today's Tuesday, so we got EIA tomorrow.
Taco Tuesday, eh?
Danny, thank you.
I meal prepped with some shredded chicken tacos for this week.
There you go, buddy.
All right, cool. The music's playing on the stage, Daddy.
Yeah, I got nothing else to add to this conversation today.
I love it when you come on. Nice trade. Tomorrow, let's share your screen tomorrow on trade if you're trading. Okay. All right.
You'll see my historical trades too.
We'll see those as well. All right.
All right. See you guys.
Thanks, Take care, Danny. Thanks, man. Take care.
So we have Biden speaking in New York now at the League of Nations.
Biden?
Yeah.
The Justice League. He's talking to Batman.
Yes.
He thinks he is.
Politics is so funny. No, I don't care what aisle you're on.
Just crazy.
Yeah, we used to have arguments back in the day where people start talking politics. I'm like, hey, guys, if you are wasting your energy, and as a trader, you find your opportunities as politics are talking. As everybody's talking about it and wasting their energy, you know, blah 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 blah. Message sent, posted on my social. You should be learning and understanding how to trade the markets during those type of events, or just know that that's another form of, just don't get caught up in anything else. I mean, total focus is what you need in trading. Total.
Yeah. And also we will keep that out of the YouTube comments, more so because I don't want to deal with it. There's a million places you can go.
Politics,
to the religion.
Keep it to yourself.
I think it goes back to Jack. We talk about tradertainment and hanging out with other traders. Like you're in a living room with your buddies. Like last thing you want is two buddies. Trust me. Last thing you want is two buddies to start going at it in politics. It just annoys everybody. Like, come on, guys, the game's on.
Yes.
I'm gonna do this, Eddie and Hoag.
Go ahead.
You know what that is?
You're calling it a day. You're done. You're putting it.
You're a winner.
11:45.
You're a winner. There you go. And then you know what? We need the winner music. Winner. There you go.
Well, that's kind of like that's good theme music for today, because we're talking about dancing. It felt like a little dance, and then
a quick dance. We're only letting you dance like 5 seconds, Mike. We're shutting you down. Zeke trades. Would a coach be able to help me work on my entries and executions? Yes, we've got group coaching today with Paul. It's going to be at 12 o'clock noon Central Time. And of course, we cannot forget about our 11 o'clock special. Jared Tendler is going to be with us, a leading expert, and how your mental game impacts performance. Gosh, that is so valuable, and full circle here with our traders. So keep an eye open and an ear open at 11 o'clock here today. Author of Mental Game of Trading is going to be with us. So he's going to answer a lot of questions live too. So have your questions ready and join us here at that time. But right now we got 9:44, and coming up very shortly, we've got Shoulder Tap.
There we go. Hey, if I was in a 50K, just so everybody knows, if I was in a 50K, I'd hit I would pass the trading combine today, and that's 2 days. I'm only saying this because we need to understand that you can do this. Everybody can do this. You guys watched how patient today was a patient day. Last week that was not a patient day. And that was also just cold and bad. But I had John to talk out trades. This is why I highly recommend jumping into the chat or actually going over to our Topstep. I have both of them. Going over to our Topstep Discord and finding trading buddies. And you got to be a little vulnerable, but there's also, I think, a channel for it. And then you get to have somebody like I talked it out with John. You think if I didn't have John today talking trades out, I would have been up? I bet you I would have been down. And I say that because I would have been getting into trades. If I didn't have you guys to talk to, I would have been getting in a lot more trades.
That's nice of you to say, Michael.
Well, thank you. You are my Pistol Pete, Eddie.
You're my knight in shining armor.
Eddie, Pistol Pete, right? I mean, he's a most assist or something
Pistol
like that.
Pete. Yeah, they say he was like one of the best basketball players ever in his generation. Now, that's one thing I'd like to, like Wayne Gretzky. Do you think now in today's hockey he would be as good as he was? That's a question. So, I mean, even though, Roger Staubach, would he be good? Would he be a good quarterback now? But, I mean, things get ramped up. It's all about progress and how well we do. But I'm ready to progress forward here. And let's get ready for shoulder tap, pat on the back, whatever you want to call it. Who's doing well and who needs that tap on the shoulder? We're going to be bringing Mick in just a few seconds.
Love this.
Hello, Mick.
Morning, gentlemen. Nice to see you.
Greetings, my friend. Did Brett let you use one of his shirts?
I like it.
I like it too.
That's a golf
I thought he had one of those Charlie Sheen shirts on last time around. I got my golf shirt on today.
Yes, it's a very nice shirt. Is that like a peach, an orange, a mauve? What color is that?
Guave.
Mauve.
I mean, we like it.
Right,
Mick. Don't let Eddie rattle your confidence on what you picked out in the closet today.
I'm unshaken. I'm very comfortable in my own skin with my own style and clothes.
Man, it's a nice shirt.
It is a nice shirt. Thank you.
Yes. Michael.
Picked this up from Palm Desert, California. We were talking.
Well, that makes it cooler. There's a story
Even
behind
cooler. Yeah, it's a Cali shirt. Amazing golf courses out there.
Cali.
Guys, I got some exciting stuff to share with you today. First of all, I want to give a shout out to some of our Topstep traders, Michael and Dan, trading in their live accounts today. Danny up 500, Michael up a little over 1,000. Good work. Nice seeing you guys put some blue on the board.
I did.
And you're done for the day. Did I hear that, Michael?
Monday, Tuesday.
Monday, Tuesday. Oh, nice. Is that your little chicken scratch back there for how you've been doing?
Monday, Tuesday last week. Monday, Tuesday, Wednesday, Thursday. Or actually, yes, I think it was.
Yeah, good trading. We've got some other people who are up nice and big today. Big shout out to Hugh from he's trading in his live account. He's currently up 9,100 NASDAQ. He was long. He just exited. So good stuff there from him. Shout out to Wally G, another trader in the live account.
Mick, before you jump, that's hella good. $9,100 on today's trade. Trading what?
Trading the NASDAQ. He was just long, just covered that trade. But also, not trading huge. He's not slinging 15 lots. He can do that size. But he's just found some good entries today and some good exits.
Yeah, that is kick ass. Like I traded and I missed a lot of trades, and he's trading smaller and like 1,000, like 9 times that. Guys, this is the reason why, again, we love working with traders. We have all traded forever, but then we find these kick ass traders that are doing well. For one, Mick's going to be on the phone with them, telling him to keep that money in his pocket or take the money and put it in his pocket as far as a payout request. Because that's a better trader than I traded today and Hoag traded today. But you know what's great about this is that's the business that we're in now, making sure we find traders that are better than us, and I love it. So Mick, that is one for one so far on awesomeness. What's the next one?
Yeah, really quickly to what you were just talking about, traders being better than us. Now, me personally, I had many days in the $9,000 range, my biggest winning days. Never went over into the 5 figures. Never really cared too much though. I was here to make money, but I traded my own strategy in my own size I was comfortable with. I always knew that there's going to be better traders out there. There's going to be bigger traders out there. It wasn't for my risk tolerance. So I see that. I get super excited for these guys. That was never for me taking, that much risk to put up that, large of winning days. But, be the best version of yourself. And while this is a competitive industry, there's always going to be a bigger fish out there. I mean, even when I was with a hedge fund prior to Topstep, we were trading very large size, but the principal of the fund would still say, we're just a little fish in the ocean. So that's good perspective, I think, to keep. And Michael, you said another thing about calling these traders, telling them to keep their money. I did not have a chance to call Brandon S., one of our traders, in a live account. I was going to give him a shout out today. Now I'm going to just make him a learning experience for others. He was up $6,000 in his account today, and I saw he had 11 contracts on in the NASDAQ. And
a lot.
As I was getting prepped for this segment, before I wanted to check to see if he was up any more money, only to see him down $9,000, or excuse me, down $3,000 on the day now from being up 6. That can happen quickly when you're trading 10, 11 contracts, but that's also an area for improvement on risk management.
Yeah.
$6,000 winning day is a very big winning day. It's significant profits. You really need to be careful letting a $6,000 winning day turn into a $3,000 losing day. That's a $9,000 swing he had in the course of about 30 minutes.
What was his last 5-day, just off the top of your head, if even a 5-day average average daily profit?
Well, I gave him a shout out yesterday. I think he took a couple days off last week. I gave him a shout out yesterday. He was up 45. He ended the day up 4,500 yesterday. And Michael, it escapes me what his 5-day.
Yeah, no, that's fair enough. That answers my question. 4,500. You just added yesterday you did 4,500. Today you did 6, and you gave up all your 6. I'm worried for him now going into tomorrow's trade. And you know why? Because you gave up 6. You've been crushing it you put up 10 in the last few days. Yeah, exactly.
Psychologically, it's kind of crushing. So, and around this, 4,500 yesterday, then you're up 6,000 at one point today. You're up 10,500 on the week on Tuesday. That's a big head start. Now, had he locked that in and not risked it, even if he kept half of the 6,000, he would be up 7,500 on the week after 2 days of trading with 3 more days of trading. And now he wiped out a good part of his profits from yesterday. So he's up only $1,500 on the week.
Wow.
You do this math and it's like locking in profits. It's a great example of how locking in profits is so damn important. He's up 1,500 now. He could have been up 10,500. Now, there's nothing wrong with taking additional trade setups as you see them, but it's a money management business, and Brandon's got an area for improvement here. Hopefully, and when this kind of thing happens, it should sting. You got to get over it, but it should sting. And if it doesn't sting, that means you're not going to learn from it. So I always think a little pain is good because you learn from the pain.
Now, okay, Nick, can you really quick, Eddie? Can you keep us on track with this trader? It's not for like, hey, let's watch a guy. We're just gonna watch a trader that had these type of swings. We're gonna turn into a teaching moment and let people know how valuable it is to lock in your days. There's so much opportunity that could happen today. I don't care. I mean, I'm locking in my day. And this individual is up 6 and was up 4 yesterday. That's 10, and he's only up 1,500 for the week. I mean, these are the you talk money management, account management is risk management, and then account management is like two really different skill sets, right?
I kind of view them as interchangeable.
Okay.
You have your risk per trade, but then you also have to, calculate your risk for the account too. So I think they're similar. There's kind of blurred. They're two different things. I agree with you, but there's kind of blurred lines there, and you need to find the formula to bring it all together to be successful. So One other thing I'll mention as we continue talking about Brandon and his activity in the live account is he was someone who put up huge numbers in his express funded. We transferred him over, and sadly, his first 10 days in the account, he lost $3,000 every single day. 10-day losing streak for $30,000. That's another eye opener. You gotta catch yourself at some point and say, like, holy cow, what I'm getting smoked. I'm burning through all this hard-earned money. I got to pump the brakes. I got to take a break. I got to take a vacation. I got to go walk away from the computer, take a couple weeks off. I need to do my homework. I need to evaluate. There's so many areas for opportunity here. And I say all these things. He does have a good eye for the market.
Okay.
Yeah. I tell you, we're all human, and we make these mistakes, but we can't be making these over and over.
Correct.
You know what? If we can we get to the cards here? I know that we got some decent cards, and
I got a few cards. So let's start off with Colby P.
The last trader was Brandon, correct, Mick?
Brandon S. Yes.
Z Communicator, which I like his idea. What about inviting him on, assuming he gets his turns the corner or whatever, even if not, trying to invite him on and incentivize him however we need to incentivize him, guys. It's hard to get live traders to say, yeah, I want to come on here and talk about my trading, because it's kind of like talking to a no-hitter when they're pitching.
And hopefully he doesn't feel like I'm picking on him if he's out there watching now. But
we're all learning here.
These are things we need to hear, our traders need to hear, we need to hear what's going on, not all talking about success, because that's, half the business there. We average winning days, you can be right only 50% of the time and still be profitable. So we all have losing days and losing trades. Moving on from that, Colby P, Elk Grove, California. Now, I've been really excited to share this. Colby's on an 11-day win streak, averaging just under $1,000 a day. And he likes paying himself. He's taken about 10 grand in, $2 grand in payouts. That's my other trader I want to talk about. So taking payouts, and I'm sure he'll be taking another payout pretty soon here, because he took one as soon as he hit those 5 benchmark winning days, which is awesome. It's such a good habit to pay yourselves regularly. It makes that money tangible, not just a number on the computer screen. And, it's what we're here for, putting money in our pockets. So always be taking payouts from your accounts. Colby's been taking payouts from his express funded account. So he's in a simulated trading account, and he's just crushing it trading the equity indices.
That's awesome to hear. Colby's live or XFA?
Colby's XFA. Okay. He may be coming up to live sometime soon. I mean, this is what we want to see. Someone who's, consistently profitable, not taking a lot of heat on his trades too, which is really, really nice. It tells me there's good trade location. So no doubt we'll be talking more about him in the days to come, and potentially talking about him trading in a live account sometime in the near future. It's certainly trending that way. Next, let's talk about Menachem. If we could get his card. Menachem. Trading out of New York. Another really, really good trader here. Love seeing the activity. He's on a 10-day win streak, which helps obviously contribute to the 93% winning days. Even better than Colby, trade location here. Super, super great trade location. And what I see, what leads me to say that is, for all of you out there who have the trade reports, look at your P&L lows on the day from that trade report. If you have very, very small dollar values in the P&L lows, that tells me, that tells risk, that tells the rest of us that you're getting in these trades, you're taking very, very little heat. And, that with averaging $800 a day tells me really good trade location. So 10-day win streak for $9 grand. It's awesome. This is the stuff that excites me.
Yeah, 10-day. I wonder, Robert and Stat Guy talks, he has a 10-day leader, or he has a win streak leaderboard. So I'm very curious where that leaderboard has shifted, who has risen, who has dropped in that leaderboard. But I can see Menachem.
I think we're pronouncing that properly.
Yeah, I like it. My last name's been butchered since I was born. 10-day win streak is awesome.
Yeah. Really excited about this next one I want to feature, Emanuele.
Is Menachem being brought up live?
There it is. Emanuele.
We're keeping a very close eye on him, and someone will be reaching out to see if we can bring on for the Power Players segment on Thursday.
Ooh, I like
Nice.
it. Brandon's another great one for the Power Players, and then Menachem, love it too. Yeah, 10-day win streak. I want to hear all about how you manage a 10-day win streak and not have your ego start coming in there, being like, because the confidence zone. And there's the cocky zone.
Yeah, that actually, I like that, Michael, because there's so much psychology around being on a winning streak, a big winning streak too. These aren't small winning days that these traders are putting up. So I think that'd be really fun for our viewers. And we'll reach out to all three of those guys. So thanks for saying so. Emanuele out of Palermo, Italy. We don't have a ton of traders out of Italy, but over time we've had quite a few. Just not currently. So really excited for him. I'm not seeing any areas for improvement. He does have 64% winning days. His losing days, he's not even going up to his daily loss limit. So he's got his own personal loss limit. He's got the discipline, trading very well. And he's up 9,000 today. He was up a little over 11,000 yesterday. So up 20 grand in 2 trading days, and he's taken quite a few payouts, quite a large payout from this express funded account. Pulled out a little under 10 grand from his express funded account just last week. So really happy for him. That'll go a long way buying my favorite food, the Italian food, out there. So all the good stuff, seafoods, pastas, pizzas, cheese, carbs, meats, all good stuff.
Yeah,
awesome.
everything.
And it may be some Aperol spritz too, or some good wine.
Mm-hmm. Was it Palermo where they what's the White Lotus? Wasn't the White Lotus in Palermo? I don't know if anybody's watching.
Part of
I'm
it
not
was.
sure.
Part of it was.
Palermo.
Great show.
So, another thing about Emanuele, not just trading the equity indices. Most of our traders are doing equity indices. I love seeing crude oil, the energy markets, and silver too. Now, silver is, it's kind of interesting. Most people gravitate towards gold, but I like the silver contract, a little lower volume, but it's a bigger tick size. It's $25 a tick. So things can go very well or go very sideways in a jiffy there with that one. So happy to see he's broadening, his markets that he's trading. I like that, depending on what your strategy is and what kind of approach you have to the markets. If you bring a technical approach to the markets, you can trade anything under the sun that you see, a setup on the chart for. So that's pretty nice too. So those are my main traders that I wanted to feature today. But aside of giving Danny, Michael, shout outs, we've got Hugh from France. I've talked about him a number of times on here, up 9,000 today trading the equities. Wally G, who's in a live account, up 3,500. Nick H, live account, up 5,900. So a lot of green on the boards today.
Good job.
I'm not seeing a lot of red, which is always really exciting. We as a trading firm, we want to see our traders doing well. When they do well, we do well. So all good stuff here today.
Cool
Eddie,
call. Yes.
Eddie, you want to have a little smash
Yes.
like hunt? Smash
Yes,
like
I was going to do that.
for Mick. For Mick,
Mick.
Smash the like. Hopefully you enjoy the content
Hold on.
here. Today was
Smash
exciting. A lot
here.
of good stuff to share.
I
And some
had an
good
idea.
examples of things, you might want to work on or try not to replicate.
All right.
hold on. Hold on. Before he leaves,
Mick,
I think
you like the Bears, right? You're a Bear fan?
The Bears.
You're a Bear fan. Okay. If we get 700 likes, come on, there's 877 people here. Mick will wear a Packers shirt this Friday. All right. He will wear a Packers shirt doing this segment. Tap on the shoulder.
Will not comply. Won't catch me in that. Okay. And if it comes down to it, I'm going to catch a cold on Friday.
Okay, hold on. So you're technically not allowed, and we're going to bring it to the judge and jury. Technically, you're not allowed to call the shots because Danny and I couldn't do it. Neither could Hoag. So, what? How about we have a Eddie? If you won't do a Packers, let's just say you won't do it. We give a couple options. What if he wears a Brett shirt? or just give me a couple options.
He's probably got a Brett shirt. I mean,
one other ground rule from wearing the Packers shirt. I'm not shaving the mustache off.
No, you don't have to do that. No. How about this? How about you bring in your putter? You've got to make a 20-foot putt. Otherwise, you wear a Packers shirt.
You're still going back to the Packers shirt. It's not happening.
Okay, so the Packers shirt's not happening.
No.
All right. You make the 20-foot putt. If you miss, we give away 3 Top Step Trader hats at Top Quiz.
I like that.
Can I pick the traders? I like that too. I got a number of traders who would deserve.
We got to do it systematically. Jack does a great job of, anybody that enters Top Quiz has an opportunity to win these hats. So
So he has to make a putt.
He's got to make let's make it a 10-foot putt, and we'll put 3 hats on.
10-foot putt, 1 try, 2 tries, 3 tries.
That's a gimme.
I think you get 3 shots
in the Board of Trade building. Right.
You can do it in the office.
From the top floor of the Board of Trade. Deal. Sounds good.
So let's get these. We need, what do we need? We need 600. Let's go 700 likes. Let's hit that like button. Smash that like button, boys and girls. Come on. If you're here, there's a reason you're here. You like what's going on. Oh, blindfolded. Oh.
Blindfolded.
Somebody said blind. Yeah, that was BB Keller, blindfolded.
I mean, on one foot, carrying a tray of champagne. Come on.
I could do it on one foot drinking a beer.
On the desk.
Okay. Now let's just do a regular 10-footer, and you got to do it at the top of the Board of Trade. Is that what we're talking about? We got to get 700 likes. You do it on top of rain or shine. And you can film it because we can't get live up there. And then Jack, I assume you can bring a video in here.
Yeah.
We can do that. Brett and I can have a little fun here in the trophy room.
No editing, guys. None of this. Like you get 3 shots.
We'll be straight up.
3 shots.
Yeah. I'll keep it honest.
Okay.
And then that's on top of course. We're going to be giving. Jack gives away 150K, 100K, and 50K, but then we're going to add 3 Top Step Trader hats to that. So you got to play that Top Quiz also.
And the new hat lineup is pretty darn good too. Those are good gifts we're going to dish out.
It's badass.
Everybody's going to be cheering against me, so we can send those out. Listen, guys, I'm going to get back to it. Thanks so much for having me on, and I look forward to seeing what my putter can do here on the carpet floor.
Go get our traders to lock in profits.
That's what I'm going to get going on.
Cool. All right.
Thanks, guys. Take care.
All right. Thanks, Mick. Catch you back here tomorrow. And coming up here next, we've got Shop Talk. Let's talk some shop with our good friend Andre, and we'll be right back in 2 minutes.
Oh, yeah. I got to get Andre in here real quick so you guys can talk for a few seconds.
We can talk for a few seconds. Let's take that back.
Why do you talk to Hoag? I'll be BRB.
No problem. No problem.
Oh, he just left.
I really like that shoulder tap segment. I think that's great.
I tell you, it's good to see how good people are doing. And then the thing is, not only does the person learn, we talked about that, having a big loss, but, it's true to the fact that this can happen to anybody. I mean, obviously it's happened to me many times. And John, I hope that you can sort of say the same. But, we get to a point, it's almost like going to casino, that free money. I made a lot of money, so I'm putting it all. I'm betting the farm, and that's what happens. We don't realize that we need to sort of, okay, hold on a second. Okay, let me rethink this. What's the best? And the thing is too, when I talk to my traders, I'm always telling them, hey, what's best for the team? What's best for the company? Your account is your company. What's best for them? Not just what's best for you and what you think, but what's best. And the thing is, you're going to find yourself keeping a lot more profits, not doing too many silly things, not being as reckless, and keeping that stress at a decent level.
We've been telling people for 12 years, 13 years, you gotta keep a percentage of profits once you get to a certain level, right? Like the guy that was up $6,000 and ended the day down 3. I mean, what's wrong with keeping half of that? I mean, $3,000 is a great day. I get it. You were up 6. You lost some of it. It's upsetting. Nobody likes to do that. But the last thing you want to do is, like you said, he wasn't acting in the best interest of his company. And, he took a really nice winning day and turned it into a big loss. And we don't like to see that. Of course, we don't want that for anybody. We've all done it. And, it's just another learning process, and keep some of those profits every time.
All right. Got a minute here. We're going to be bringing in Dre. Dre is on the meter, and I know that everybody's excited to hear about our shop talk. So Dre coming up here in just a few seconds. All right. Dre, what's up, my friend?
What's happening?
Hey, Dre, do you golf?
I do. What are you going to make me do?
I don't know, but are you up for anything like this?
Yeah, I don't know if I can bury a 20-footer, a 10-footer maybe, but someone brought up like a blindfold. Forget about it. I know. I mean, 10-footers with both my eyes are still hard.
Yeah, that dominoed into standing on one foot. Come on.
I do golf though. I do. I attempt to golf at least.
Dre's pretty good. He's pretty good. He teaches me. I'll send him videos at the driving range. I'll just show, and he'll stop the video, do a screenshot, see where your hands are at, all that kind of stuff. Thank you, Dre. Taught me
the basics.
And you're teaching me how to golf.
Yeah, but then the key to it is though you've got to do 10,000 reps at the driving range. That whole part is what they don't tell you.
Going 4 times total this whole year is not going to cut it.
That's going to be hard. That's going to be hard to get better that way. It's like trading. You got to get your reps in, man. Every day.
Got to see screen time.
Screen time is right.
Speaking of screen time, I got a question for you.
Hit me.
Nova in here, and I'm going to ask you this one. Nova says, I've been in the combine for a couple months and hit my loss limit. Max loss. Still up G in the 50K. I don't know how you're doing that. Any tips moving forward? Just bust it out.
I mean, you got to get back on the saddle. I mean, that's I don't know how much experience they have, but basically this is a game of repetition. Like we were just talking about playing golf, trading's the same way. Screen time. You got to see all sorts of different patterns play out, all sorts of scenarios play out, all sorts of different breaking news play out, market states play out. I mean, you just got to get repetition time and time and time. I remember when I first started trading, I pretty much blew out my first account, and I had a come to Jesus meeting with the principal of our firm, who basically said, it's either do or die, it's now or never. And basically what I did, I just put in the hours. I was doing, the 2-day straight shifts, trying to capture every opportunity. So you got to really just lock in and get dialed in on these markets. There's no substitute for screen time, I would say. I mean, you could look at all the indicators you want, read as much analysis as you want, listen to all the analysts, but there's no replication or substitute for actual screen time, I would say.
And then everybody here, Andre's talked about blowing out. I blew out a $30,000 real money trading accounts. And then, after that is then when I started really learning how to trade. Everybody here, I would say the majority of people here have blown out of their personal brokerage account, Go in here. You guys type in here. Did you blow out of a personal brokerage account? You don't have to say how much money, but did you get to a point where you can no longer put a position on? That's called blowing out. So if that happened, you put it in here. I did it. I did 3 times, 3 big accounts. Okay, I did it. Of course, Tom says. Yep, JD says. I'm going to tell you, everybody here is done because there's a wake of people. Boom, boom. Yep. See how fast this is going. And the thing about this is like that's why we're all here to learn. So we're all in the same camp. That's why we don't allow any like trolling of trading because it's just like so damn hard already. And if you're with a good support team, it makes that better. Hence talking shop with Andre. So Andre, I like that feedback.
I appreciate that. Also, that's kind of what I want to get into today. It kind of leads me perfectly in that subject I would like to talk about is that team trading session that you and Hoag did this morning was freaking gold, man. That reminded me of being back in the trading office with guy sitting next to me on my right, sitting next to me on my left, talking trades, talking the markets. What are you seeing? What am I seeing? All right, I'm gonna take this short. All right, I'm gonna take this short with you. We're aligned. We're seeing that. What you guys did earlier today, that was like that can't be so hard to replicate nowadays with everyone trading remotely, not in the offices together. That maybe can help shorten the learning curve on trading coming into this environment, TopstepTV, watching professionals like yourselves trade real time these markets. I mean, that's like having a trading mentor. You got to pay thousands of dollars for that normally to have something like that. That team trading that we witnessed this morning, that was freaking gold, man. Like that's stuff that needs to really be appreciated. And, everyone needs to really lock in and focus on what you guys are talking about. That back and forth cannot be really replicated anywhere unless you're in a trading office with 50 other people around you, hooting and hollering and screaming at each other. That was about as close to being back in the trading gallery as I've felt in a long time.
100,000%. I had a blast. I got an award for it too.
What award?
Courtesy of Pistol Pete, my
award.
Hoag.
There it is.
Yeah, man. I'm telling you guys, Hoag confirming, you're like, Patak's like, yeah, I want to go short. Hoag's like, I like that short. We're at the session low, but, you're like, I like that short. I mean, I got short with you guys. Hell, I was coattailing your guys' trades. That was awesome. I hope everyone out there was doing the same.
Glad it worked.
We came out of the gate hot, but the markets were kind of showing us stuff.
Yeah, man. Yeah. So that was, like I said, it's the first time in a long time I felt like I was back in the trading office with all your trading buddies around you, having mentors and, that was really, really good stuff. Now the most important thing is we hang on to these profits. We don't piss them away.
Yeah, exactly. I'm done for the day. I'm just chatting till I roll out. But lots of people in here talked about blowing out of accounts, whether it's at Topstep or their own. Dan Trady said something about it's the rite of passage and getting having to pay the tuition, so to speak. Andre, you taught me that nobody should ever have to pay a high tuition to learn the markets, and that's when we were really starting Topstep. Andre was one of the ones I really consulted with back in 2010. He came from a big prop firm. I came from a prop firm, but I had blown out of 3 trading accounts, and I don't think you traded your own account. You traded with a prop firm, and you got really mentored by just a kick-ass individual. I won't name his name, but he was the founder of that firm, gave you that little speech. But we have all gone through like the trials and tribulations. You should not have to pay $90,000 to learn how to trade. I think I paid like $40 for college, and that got me a piece of paper that I could apply for a job that I never applied for. It was my backup plan, Hoag. Remember we talked about working for somebody else? That was my backup plan, getting a real job.
Yeah, you were going to get a bartending job in the tropics.
Yeah. Yes, a cocktail or whatever that movie was. So Andre, a lot of people have been through that. How many people did you see? And Hoag, you could probably ask you that question too. How many people did you see come and go, and what was the average time period?
Good question. So the way with our with the prop firm coming up, when I first got out of school, there was a class of 9 of us. Kind of call it like your pledge class or your recruiting class. There was 9 of us that came through the training and education process. 3 of us actually made it to get what's called on contract. So right there, that's a 66% failure rate of. So only 3 of us actually made it to going live, so to speak. So that's what we saw. And those 6 that didn't go live, I think they probably each lost around $5,000. And $5,000 of the firm's money. That's the risk that the firm's willing to take on to find 3 good live traders that obviously will offset those losses. So our class was 3 out of 9 succeeded. I want to say the class after us was around that as well. It's about 33% that actually go see a live contract now, live trades. Now, of those live traders, how many are actually profitable and can last? Now that number diminishes even more. I mean, this is a tough game. Some guys kind of checked out. Some guys got discouraged by the early losses. I was there too. Luckily I had good mentors and good people around me that, kind of gave me a kick in the butt when I needed it or a pat on the back when I needed it. So it's tough. It's not, no one says it's easy.
Yeah.
What was that, Andre? Andre, what was the last part?
Oh, sorry. I thought Eddie was going to say something. I was just saying, a lot of it's like your support system around you. Cause I know market fundamentals, I know market basics, but a lot of it's up in your head. Confidence is huge in this game. You put on 2-3 losers, like you last week. I know you had a rough trading week last week, and that could really
I had a rough trading day.
There you go. Correction. I like that. See, that's confidence, but you got that from experience. You weren't like that on day one.
No.
Well, and I think one of the things that helps Michael so much, especially in these sessions, and allows somebody to agree or to help him with his decision making, is the fact that he is so stream of consciousness. It's what he's thinking that's coming out of his mouth that really kind of helps me get into his head a little bit and kind of talk through some of these trades with him. And overall I think it's been going really well. And so Michael's willingness to put himself out there in a stream of consciousness kind of way, I think really helps in this situation. And I think it would help if he was on his own too. I mean, if you're really thinking your way through all these trades, you're cognitive. You're thinking about it. It's not just reaction or impulse. It's actually thinking your way through these opportunities. And he's done a hell of a job of it.
Okay, so I lost 3 $30,000 trading accounts, and then that's when I'm like, man, I need to work on my mind. So the stream of consciousness is really what I learned. Look, I have this. I don't know if you guys remember this. Here's a Trapper portfolio, like Trapper Keeper.
Wow.
This is in 2001, and all these papers in here are. I keep them literally. I could grab one. Recognition. Notice that this is not working. What do I do? Question mark. Delayed gratification. Scanning through your system and then identify weaknesses that apply to your life. On one hand cannot applaud. Lack of discipline. Discipline requires work and doing what you don't want to do. Have to go through it to become disciplined. Either disciplined or not. Either honest or not. You're the pro trader or you're not. I mean, these go on. That was a class. Now, that was a trading psychologist class that I took. Jared Tendler. Jack, correct? Jared Tendler's coming on today. Mm-hmm. Today at 11 o'clock. This is paid for. Yeah, this is paid for by Topstep. We a lot of these folks that we're either partnered with or we work deals out with them because they're valuable. And when they're valuable, we want them to talk to our traders. This is really no different than Andre's prop firm. You talked about him signing contracts. We have traders that sign contracts when they get on. Mick just talked about calling up traders. So if you want to, again, trade for anybody else, you can do that. But if you want to trade, we're guys real passionate and put you on a journey that gets you to the end goal of becoming pro ball. We use that word, pro trader. That's what we're here to try to help with. See everybody who's blown out. And my point with all this is we've all come from this area of know nothing, blowout, but then we're here to get better. And having all that opportunity and then getting your mind around it, it's just it's a craft, and you're not done until you're done. And that's why I love working with you guys on this. We talked out trades this morning.
Never surrender, man. And coming here, I was just listening. I had you guys on in the background while I was watching these markets, and I was basically looking through your eyes at what you guys were looking at. And this, like I said, this is damn near as close as I've ever felt to being in the trading office again with all the traders around you.
Ah, there you go.
Hollering out trades and stuff. It was awesome.
Nice.
Just remember too, real quick here, we got Jared. Right after that, we've got our group coaching. And I mean, that's huge. John started that. John is here. You're here every Monday and Wednesday, correct?
Yes.
Okay. We've got Coach Paul going to be talking about, I think the topic is FOMO, but make sure that if you want a question answered, we've got an email address. Okay. I will post it here in the YouTube, post it here in the Discord. If you want your question answered, email questions are answered first. And if we have time, then we will go to the live questions. But we're here. We're here to educate. We're here to help you. And if you don't realize that, I mean, stick around for a while and you say, wow, this company really does want me to get better.
I'm reading through my stuff. It's just
what's going on in your head over there?
Well, I haven't picked this up. I keep it right underneath here, and there's a basket full of like my old shit. Trader Tech University. You guys remember this? Trader Tech University is like an 2000. Yeah, I know. They had me read the Road Less Traveled book before we could even start the trading psychology class. So Road Less Traveled by Scott Peck is a great book. And then everything was about discipline and everything was about owning it. And it was like, hey, if you brush your teeth once a day, I brush it twice, but like if you actually brush it once, you're disciplined. You have some level of discipline. You have some level of discipline. And it kind of goes into like, you have discipline, you got to work it though. And then you get your discipline in a thing that you dilute powers of FOMO. You manage your emotions. You can't control your emotions. You manage them, but you can control your behaviors. And all these little things that tune in for Jared Tendler. I got that back in the day, and I had to pay thousands. So you shouldn't have to pay that tuition. But Topstep didn't exist way back then, and I had to pay my tuition to the markets. There's the only way to really learn was going to the markets because there's no way to get evaluated. There's no real-time simulated experience and all that kind of stuff. And then there was no coaching or free coaching, group coaching, and there was no psychology. It just wasn't there. So we're trying to provide all this, and it's a Topstep investment. So this is TopstepTV. We don't make any money here. This is investment. Jared Tendler, investment. Group coaching, investment. Yep. All of it's investing in our traders, whether you just started today or you're one of those individuals that Mick's talking to about getting called up, signing contracts like Andre did.
Yeah, this is the real deal. I'm really happy that TopstepTV, we got this going because I saw some people in the chat saying this is going to help me not make any boredom trades, quote unquote, boredom trades or lonely trades, or sometimes when I'm by myself, I'll talk to myself. I admit it, and this helps. When I'm talking to myself or thinking to myself out loud, and you guys are kind of along the same thought process as I am, I mean, that's just like, now you feel empowered, like this trade, you feel real confident in these trades, what you're looking at. This is as good as it gets. This is pretty badass. Not gonna lie.
JT Discipline goes in here, also making your bed. JT, remember there was the
seal.
The seal, that did like it was a commencement speech for graduates, and all I did is talk about making your bed. It was like, okay, I get where you're going.
You got something accomplished. If you at least got something accomplished for the day, first thing in the morning, and if you happen to have a bad day, at least you get to sleep in a bed that's comfortable and already made. So it's a good restart for the following day. It makes a lot of sense.
Admiral McRaven. Is that a Marine or SEAL? Is a SEAL a
he's
Marine?
The guy that says if you want to be disciplined, the first thing you have to do when you get up in the morning is make your bed.
Make your bed. Yep.
And there's like a level of delaying gratification because you're like, man, that's not – who wants to like just wake up and start doing like a task? But you do it. And you build that muscle. That's why I think discipline, we talk about it so much. That's why I'm not always a fan of like how other people talk about trading and the YOLOers and all that. I'm like, that's just so short-lived. Go play your roll of the dice craps game. Discipline to me is longevity. You can have these conversations. I can be talking to Hoag and everybody who comes on here forever about trading. And I know I'm at a point of my discipline where I'm going to accept the defeat, and I'm going to bang out scratch days or good days to the best of my ability. And if the window of opportunity closes, I'm done. And
for sure.
Yeah.
What are you guys thinking about for tomorrow? Hoag, I want your take, what you're looking for tomorrow.
Well,
unchanged.
Yeah, they're not going to change anything, but my concern is more technical now.
Cool.
We've been, this is the daily in the S&Ps here, Andre and everybody. We've been coiling. Yeah. We've broken out. And if we stay down here and we have some meaningful participation down here, I think there could be another leg to the downside from this.
Yeah.
But I think a lot of it really kind of depends on this weekly kickoff level. You know, this morning I was talking about how when weekly kickoff levels converge with a trend line like this, these are opportunity days to me. These, if it wasn't FOMC tomorrow, I think we'd be seeing a lot more volatility in this situation. But everybody is just kind of positioning themselves for tomorrow.
Yep.
So we'll have to see what happens. But if we stay down here, we remain down here, and we can't get back up into this balance area, then I think we're looking for some continuation to the downside. I'm glad rollover's over, number one, because now I can start depending a little bit more on volume and open interest.
Yeah.
But that's a little bit longer time frame. Now we'll take a look at the NASDAQ here. The NASDAQ has not quite reached the breakout level here. Okay, so it broke out last week's low and this trend line convergence, but we're still kind of weaning down towards weekly kickoff low. I'd like to see, for trading opportunities, the NASDAQ to close down below this level and stay down below this level. But for investment opportunities, I would like the market to fail down here and take out the highs.
Same. God, this is good. I can't wait. All right, man. This is
and you said rolls over, so it's like I love when rolls over because it's like game on. Here we go.
Yep. Let's get it. Oh man, I'm pumped. All right. Well, yeah. With that being said, I can't get too pumped for tomorrow. I gotta keep your try to stay level headed here. Hell, I'm not gonna lie. I need on you guys to keep me level headed because sometimes I get too amped up, and Hoag's voice is very calm and reassuring. You know, sometimes Michael likes to gunsling a little bit, but Hoag kind of keeps him in check. It's a really it's a great yin and yang, man.
I got a hamster in my head just moving at 100 miles an hour, Andre. I mean, you know how hard that thing is to tame?
Hoag reels getting pretty well.
Oh, Hoag, yeah, he's a balance. Look, I couldn't have another trader like me. We would be both blowing out at the same time.
For sure.
I'm trying to picture what's going on in my head now. Michael's got a hamster. Mine's
lunch.
I think you got you have just a guy playing a guitar, just chilling
with an empty whiskey bottle and
with an empty whiskey bottle.
Very zen.
Yeah, with something sitting in the ashtray. I don't know. I mean,
all right.
Nice chill.
All right, so we're gonna be disciplined for the rest of the day, right? No trades unless something really pops off.
That's my plan. I mean,
awesome, man. This is today was a good day, fellas. I really liked it, man. We got to keep this up.
Well, thanks for coming on. Always enjoyable to talk to you. We talked a lot about discipline in here. Hey, who said this right above here? They said discipline. They're working on one thing, not over trading. I love that. Who said that? Oh, the way out. I'm working on the discipline to not over one thing. Make your bed. I'm working on the discipline to not over trade. If you focus on one thing and then you get really good at that one thing, diluting the power of FOMO, not over trading. Focus on one, nail it. And I'm saying 3 months. What do they call it? The 76-day challenge, or you see a before and after picture of somebody that I was here and now I'm ripped and shredded and all. That's 90 days. So you can create a whole new habit in 90 days. I think actually a little bit less. And if you guys really want to put in the discipline, that's why trading is hard work. But it's once you do it and you get all that screen time and you put in, you focus on the one thing, you can literally get better at each of these little areas. So Andre, great chat.
Awesome, guys. Awesome.
See you, buddy.
Take care.
Thanks, Andre.
Later, guys. See you tomorrow.
All right. Andre, thank you very much for being with us here today. We got Andre back tomorrow. That's a good talk, too, when we get sort of take a time out and talk about, how we can make ourselves better and what is out there that can help us make ourselves better. It's a choice that we have to make. Discipline. If you ready to educate yourself? Are you ready to do the homework?
Mm-hmm.
I mean, there's a lot to it, and I used to get a kick out of getting when we had intercom, people would be sort of chiming in to check us out, and the first question they would ask was, "When do I get paid?" Well, if you want to cut my grass, I'll give you $20. It's a small lawn,
right?
It's a start, but But I mean,
my
honestly,
new sloop.
you've
How'd
got
you
to
like to mow my lawn.
you've got to do the homework. I mean, that's like, we're going to go back to sports. Little league. I coached little league for 25 years, and at a certain age, a kid wants to throw a curveball. I mean, at a certain age, you got to tell them, you know what, just go with the fastball slider. That's fine. But when you get to that age where, kids can throw a curveball, I mean, you teach it to some kids. And then you can see the progress during practice that these kids have been working on their own. They've been with dad or with their buddies working on that curveball. And then you could tell the other ones that are like, oh, I'm still learning. I'll just practice here at practice for an hour. And it just doesn't happen. Just doesn't happen.
Good trading habits, discipline, I swear to God, I mean, for me, it spills over into your personal life. So like you're getting like two positives, like trading well. Oh, and I'm more healthy, or I'm more under, like I can manage my behaviors better, and all that kind of stuff. That's why trading is so great, because it doesn't only just stop in the trading world. It does spill over into your personal world. And it's like, hey, that's just like self-help book but you're going to do it in trading, and then it spills over into your real life. And for me, it worked that way. And it allows you to find success both in relationships and financially and all that kind of stuff much faster.
Douglas says, don't use sports, use trading. Well, I mean, we're basically talking about high pressure situations when you're under high pressure. Okay. I mean, same thing. I mentioned that first, and then I went to sports. You got to do the homework. I hear crickets.
Yeah, crickets. Let's have the little crickets. Can we all handle a little awkward silence? I think so.
You think the market is hearing crickets right now?
I think, Hoag, I think I just pictured that person that's in your head is you sitting on the porch with your cup of bourbon and your guitar, and you're watching somebody mow your lawn. Pretty relaxing. You don't have to do a shit.
That's actually happened. I mean,
I know. Yeah, you definitely look like the type of guy who would enjoy that experience.
And I have many times. Got to get back to the guitar. I haven't been playing much lately, and got to get back to it. It's something I enjoy. Something actually I didn't realize it until I kind of stopped playing it. My wife and kids really started missing the sound of it in the house. They all came like at different times and like, why aren't you playing guitar anymore? Because they missed having that sound in the house. I mean, it is, there's something about an acoustic guitar that is very relaxing as long as it's played well.
Mm-hmm. Hey, John, let's jump back in the markets really quick. Playing well. I think you played it well today. I'm happy with my performance, and I'm also happy that I caught the window of opportunity that was open. And I don't believe the window of opportunity is open for me right now on reading anything. Therefore, I put the Post-it note on the wall for a W. But I appreciate the talk out. I also appreciate we're both on the same side of the market this time. Mm-hmm. Last week we were you were looking at the long side more than I was looking at the long side, and vice versa. So yeah, it was fun trading with you today.
Yeah, good. I enjoy trading with you too. It's always fun, especially when things go well, right? And we're continually learning how to manage risk. Even if with as many years as we have in these markets, it's still more to learn.
Yeah. And hey, Jack, I'm going to be cutting out. I'm going to get some stuff done. I want you guys to take it over with the rest of the way. Guys, I had a great time trading with you guys all today. I learned a lot. Not only am I feeling good about making money today, even if I didn't make money today, my think tank, my knowledge tank is a little bit more full. And I've been doing this for 25 years, since 1998, trading. And I appreciate today with you guys. Eddie and Hoag, I'll let you guys take it.
All right. Nice trading.
See you guys.
All right. Kiss. All right. Hey, just a reminder, we got Rob coming up, Stat Guy. Jared Tendler is going to be with us here today. Coming up at top of the hour here, mental game of trading. Don't leave. This is going to be really good. Trading psychologist, and yes, help you learn how to keep your career moving forward. All right, let's take a few here, a couple minutes, and we're going to be bringing in Robert, Stat Guy.
Go.
Hello, Robbie.
Hello. Good morning,
Robert.
afternoon, and good night.
We got stats coming up here. We're running short on time, so we can get through these. That would be fantabulous.
Absolutely. I got a couple neat ones for you and kind of got through this little issue on the individual trader stats. So we're going to blow right through these. I'm sorry MP left because he asked me to look up some stuff for him yesterday. I got it all prepped up in a graphic that Jack's going to throw up on the
Save
screen
it for tomorrow.
me. Oh, no, we got to get that hot streak because the hot streak's died. So that's what we're going to, yeah. That's a hot streak. And if MP's listening, again, this will be recorded. Watch it on YouTube afterwards. I'm going to run through these real quick, so bear with me. This is the hot streak for the 4 top traders yesterday. We had 12 days, 12 days, 12 days, and 11 days of a streak. I want to go to the bottom of that streak. Mark, it's the bottom. It's still at 11 days here because he did not trade another day. That streak still holds. Moving up, Rashad was on the 12-day streak. Stopped. That one stopped. He had a losing day of minus 54. Had a good day, like good profits and stuff coming in, but the end of the day, the P&L was minus 54. It's a losing day. Sorry.
What?
Moving up to the next one, Richard O. Losing day after 12 days. I don't know if he was maybe watching the broadcast, but he went big on a lot of trades, and you can see minus 1,900 for the day. So that loses that streak. But
Ricardo.
Andre, Ricardo, like he said yesterday.
Hey, just so you know, Michael's watching, always watching.
Well, if that's recorded on YouTube anyway, right? Andre, the very top one, did have another positive day. Now, to remember and recall from yesterday, he had actually $12,000 P&L before, but then took a few $1,000s out to pay himself. Just took it easy, a couple of trades, managed that risk, made a few $100s. That is the way to do it right there. I'm sure what's happening is he's getting his days up that 361. That's over that $200, right? What I think is going to happen, I don't know this for a fact. This is a total assumption on my part. He's going to rack up a few days that are that over $200 mark, take out more money, and then we'll move him into live. So that is what I'm guessing is going to happen. We're speculators here. That's what I'm speculating, but he's doing it right. Congratulations. Real quick on the next graphic that we have, it's a new one, and this was help of some of the online AI tools, this combination of ChatGPT, combination of Bard, combination of Bing, and then I have plugins that I use that go out and sync in with like Wolfram Alpha, and I know I'm talking a little bit technical here, but all kinds of AI stuff to help me crunch through all these numbers. It searches the net. This is what it came up with, and I'll slow down just a little bit on this one, but what I did was I wanted to find the 3 most popular indicators used with each instrument. And I chose the 4 that we highlight on TopstepTV every day. Interestingly enough, there is some crossover, and it's interesting that look at NQ and CL. They're the only 2 that are using volume profile. I wonder why that is. And notice that NQ and CL don't use moving averages, but they use the moving average convergence divergence or MACD. Right. So it's really interesting that you have the ES and GC, ES and gold. They're a little slower moving. They're a little bit more trendy. So therefore the moving averages. And then you have NQ, which is wildfire. You want the convergence and divergence from 2 of them. So traders are using the MACD, but they're also using the stochastics to see when the move is exhausted. But they're not using that for ES. It's really, really interesting. And the final one I want to point out on this is that on gold, on GC, the traders have in the top 3 the commodity channel index, CCI. right? Why? It's a commodity. So why not use it? Right, exactly. So this is where the power of all the AI and the stuff that we can use at our expense can really help us out on trading. If I was a gold trader and I saw this and I didn't have the CCI indicator on my chart, dang well straight, I'm going to put that thing back on there and put it on. Very interesting, right?
Robert.
Yeah, I'm going to take this. We'll put this into the Discord, the Discord area, and the coaching area, and the TopstepTV, because I think it's really, really very interesting. If we can just move on real quick, I have something to do. Can you put us up on a big screen there, Jack or God, whatever we like to go by, because I need to see a little bit more of my background. I'm going to do a quick little green screen hike in here. While I'm doing that, I did take a look at if Emmanuel that Mick was talking about earlier, if you're still listening, there was a comment at the time of that conversation when Mick was going over your results that asked about your trades, about the trades, like, well, what are they doing? What's the drawdown? What is the profits like? So I did a real quick look-see on this, and Emmanuel, 13 trades. Average win time was 12 minutes, 41 seconds. Average lose time was 6 minutes, 41 seconds. Holding on to the winners, keeping the losers away from it with a 70% win rate. Real-time stats, real-time trades, real-time comments in YouTube. We want to get right back at you with the stats. Now, I don't know if this is going to work. Possibly, Jack, can you? I know this is completely on the fly.
Let me pull some voodoo. I think I know what to do. Give me about a few seconds.
Yeah, you may need to just spread that out.
Oh, I'm going to make you so big.
Okay.
It's going to be
real brief. I don't want to kill these other guys here, but I'm just trying this because that's perfect. Because the trader stat thing, I didn't have a little glitch in the system there. So I just threw something together. Okay, now here's the power. You get the blackboard, right? Check this out. This is the step number one. This is a manual automated computer human interface movement automation tool to adjust my camera. Ready? Watch this. Watch it. Watch it. Here it's going to happen. Here we go. And we're going to move my camera because I need to move myself off to the side. All right. Now here we go. Ready? Bam. We're having a green screen checkup. I'm going to move myself away. Oh, wrong direction. See?
Mirrored screen.
On the screen. Yeah. Mirrored screen. Okay, what I wanted to do was take the most common instruments that are traded amongst the three, the Combine, the Express Funded, and Live Funded, and I'll run through these real quick. We have the Combine account, Combine program, and the most traded instrument up here is NQ, and if I put that at the most traded, let's call that 100%, almost half of that is ES, and then almost half of that is MNQ. So if we had 100 traders on NQ, we had about 40 on ES and about 10 on MNQ. That's kind of how it worked, 35, 20, 15, okay? Now we move to Express Funded. It's almost the exact same. Most traders are NQ, a little less than half are ES, a little less than half of those are MNQ. However, here's the kicker. We go to Live Funded, NQ, almost half are MNQ. So think about that. If their most profitable, most common is NQ on Combine, NQ on Express Funded, and NQ on Live. However, once traders are getting into the Live account, they're scaling it back and trading MNQ. You can kill the screen now for me.
Oh, that's no fun. We should keep that up forever.
You want to keep that up? And we'll go back to our manual automated human interface system to get my screen back over the middle here. It's called hand. Yeah. So that's what it is. Sorry if I ran through those quick. It is on YouTube. You can look through them. That's the end of the stats I have for today, but if anyone wants to chat something to burn up more time, I'd be happy to.
No, I think we're probably good because Eddie and Hoag, I'll let you guys ramp out, but we do have top quiz coming up and then Jared Tendler. So I threw the link in the chat a couple times. You can also go to kahoot.it and type in that game pin code. And after we sign off here, I'll leave this up for a minute or two with the smooth jazz. Then me and Alyssa will take over.
Alyssa, you tell her we said hello. And
will do.
Please, let's smash that button here. We've got 511 numbers low. See, the thing is, if we get a higher number, Hoag and myself, we get an extra potato to eat. So to share with our family. So get that number up there. We want a decent dinner for our family here today. But otherwise, good stuff all the way around. Thank you, Robert. And John, is big day today. Well, actually, a big day in market movement. We've seen that in the ES and the Nasdaq. Little scramble in the crude, but Fed's tomorrow.
Yep. Yeah, it all leans on the Fed. Thanks everybody, and don't forget we've got Jared Tendler here in just a little bit, and Coach Paul at noon with group coaching, and look forward to seeing you there. Eddie, thank you,
Right,
buddy.
All right, man. All right, brother. You be good. Topic, Coach Paul, FOMO. Make sure that you get those questions in the email so they can get answered. Have a good day, everybody. Trade well if you're still trading. Stay safe, stay healthy. Until tomorrow, take care.
Hey there, everybody. I'm going to throw on the jazz for a few seconds as we get set up for this. Hope to see you there. The prize, 150K combine, 100, a 50K, and then 2 randoms, 50K, that I will draw during the beginning of group coaching today. So look out for that. In the meantime, enjoy the beats. All right, we are live. Hello, everybody. Welcome to Top Quiz for Tuesday, September 19th, year of our Lord 2023. I am joined, as on most Tuesdays and Thursdays, by Alyssa. How you doing, Alyssa?
Hey, Jack. Doing pretty well over here. How are you?
I am doing good as well, especially since our good friend Jared Tendler is coming on right after this. should be exciting. You'll want to stick around for that. He's great he's been a professional mindset coach for professional video games, professional golfers, all sorts of great performance things like that. And of course, traders. Now, if this is your first time playing, there will be 8 questions, multiple choice. Answer them fast, answer them right. You get points for speed and whether you get them right. Important caveat, I'm trying something different today. And if you can guess why, you get a token of my appreciation. So today, you're only going to have 10 seconds to answer these questions. It's usually 20. Now, I will say, I think the questions are a little easier today, but you will have 10 seconds. So get ready. My disclaimer as usual, there's an 8-second delay or thereabouts between me hitting the button and the question going out. So keep your eyes on your device. That is where you want to answer. And then you can listen to me and Alyssa talk about it for shits and giggles. Okay, what else to go over? Top 3 people, 150K combine, 100K combine, 50K combine. If you've won before, it's a free reset. And we might cap how many you can win in a month or quarter or something like that, but not today. So everyone can play. Lastly, I will draw 2 random people who get at least 1 question right. And we will do that drawing live at the beginning of group coaching at 1. With that, we got to get moving before Jared comes on. So Alyssa, are you ready to begin?
Jack, I am so ready. Let's do it.
Okay. We are starting now. Happy Face, Diva, Marg, 360 Trader. Who will be the last one in? Mr. Ice Wallow. Oh, I don't know about that. PW. Okay. We got to get going. We'll be back tomorrow. You ready?
I'm ready, Jack.
All right. Question number 1. Our top quiz. And away we go. In 2004, this future host won a record 74 straight episodes of Jeopardy! Was it James Holzhauer, Jeopardy James, Brad Rutter, Mayim Bialik, or Ken Jennings?
Well, I certainly don't know, so I'm going to go Brad Rutter.
He was a champion, but is Ken Jennings, who is now a host as well. All righty. Let's see the scoreboard here. HM, he knew that one pretty quick. Or she. The name of the person that I wouldn't pronounce who won yesterday, I was expecting it to be a 19-year-old guy, but it was not. Question number 2. In the 2015 film The Big Short, Christian Bale plays this quirky hedge fund manager. Is it Mark Baum, Paul Tudor Jones, Michael Burry, or Ken Griffin?
Oh my gosh, no. Is it Michael Burry?
It is Michael Burry.
Yay.
All right, 1 for 2, Alyssa.
Alrighty.
HM is perfect so far. So nice. Haven't seen that yet. That's the function of the questions being a little easier. Okay. Let me make sure I'm not getting flamed right now in the YouTube comments. All right. Here we go. So many windows open, so little time. Here we go. Which of these financial institutions was actually allowed to fail, declare bankruptcy during the financial crisis? Was it Merrill Lynch, Bear Stearns, Lehman Brothers, or AIG?
It was Merrill Lynch.
Oh, it was the Lehman Brothers. The government left them high and dry. Bear Stearns was bought by JP Morgan. AIG got bailed out. All sorts of fun was had then. That was when I graduated college. It was not a great job market, I'll tell you what.
Yep, there you go.
All right, after those, Dan the Man has taken the lead. Uh-oh. My old nemesis, the 4th place person is my old nemesis from yesterday. All right, that tickles me. Okay, next question. From its high in 1929, what percentage of stock market value was lost during the Great Depression? 50%, 60, 80, or 90%?
Well, Jack, it was clearly 60%.
Oh, you would have...
Or at least 80. or 90.
It was at least 60%, Alyssa. You were definitely right in that regard, but it was 90%. All right. See a shake up there. Solistimo, FE428, and my old nemesis. Rounding it out. All right. Next question. Who is the NBA's all-time leading scoring leader? Is it LeBron James, Kareem, Michael Jordan, or Kobe Bryant?
Jack, how do you know that I don't watch basketball?
I didn't. I thought you were a huge fan.
What? No.
It is LeBron James. This is a more recent phenomenon. It was Kareem before that. Maybe Kobe took him over. I can't remember, but yeah, it is LeBron. Do you have a favorite basketball team?
No. I like to go watch basketball for the point of drinking a beer and watching basketball.
Like at the park, or do you go to games?
not at the park.
Okay, let's check what's going up here. What? Okay, no flaming here yet. Here we go. Solistimo, 90s bid even, and Dan Trader, Kona, and David. Going on to our sixth question. By area, what is the smallest country on planet Earth? Is it Vatican City, Monaco, Luxembourg, or Samoa, as The Rock says?
Vatican City?
It is Vatican.
Yay.
Well done there, Alyssa.
Thank you. Thank you.
Dan Trader, Systemo, going hard. Got just checking the comments real quick. Righty. 2 more questions left, Alyssa. This is a bit of a speed run today because we got to get to Jared. But how are you feeling?
Right.
I think you've been doing pretty well so far.
I'm doing all right. I'm ready though.
Okay. How many recorded hurricanes have crossed the equator? Is it 0, 1, 5, or 50?
I'm going to go with 0, Why not?
Because you are absolutely correct.
Thank you.
Yeah, they would have to switch directions with the way they turn if they went across the equator, which...
I had a feeling there was something funky there.
Yeah, my friends that are hurricanes say that is very tough to do, so they don't do it. Okay, let's see the leaderboard going into the very end here. And let me also make sure... You're getting a little behind baseball here, or inside baseball. I want to make sure that Jared knows he's just in the waiting room right now. All right, good. 1 question left. How you feeling?
I'm feeling good. I'm on a little bit of a streak here.
You are on a streak. I think if you get 1 more, you'll beat Hoag's high water mark, which I think is four right.
All right.
Okay, here we go. Last question. MP revealed today that he manually tracks his week's P&L using what? A spreadsheet, the back of his hand, Post-it notes, or cups of beads?
Oh, I watched today and I don't remember this. Was it the back of his hand? That feels kind of MP-ish.
There was a clue in that photo of MP that showed up there in that he had Post-it notes in the background.
There we go.
Someone tell me a hurricane crossed the equator. I just saw this stat yesterday. Put the name of that hurricane in the comments because I am not aware of one. Okay, last question. Now I'm all messed up here. Oh, that was the last question. So now we just got to go to the podium. Let's see who won this thing. Brrr. 3rd place today, Solistimo. I think that's how it is pronounced. FE428. Maybe a robot there. And the winner is Kona. Congratulations to you 3 and to Bad Tuna Salad and Dan Trader for being just outside the top. I will send all of you an email with instructions how to claim your prize. And then at the beginning of group coaching at 1, I will go ahead and draw 2 random people that got at least 1 right, and they'll get 50K combines. So with that, Alyssa, thank you so much for playing today.
Thank you, Jack.
It was a pleasure as usual. And right now, we're going to do a few minutes, if I can get this set up, of charts and music as we get Jared Tendler set up. So stick around. You'll want to hear what he has to say. And we will be right back.
All right. Good morning, or good afternoon, or good evening, wherever you are. I'm extremely excited to have our good friend Jared Tendler back with us today. This is going to be a very important hour for anybody who is a trader. Just to briefly introduce Jared to those of you that may not know him, this is a fantastic book for traders. It is Jared's book, The Mental Game of Trading. He's got several other books for some of you that may be more on the gambling side, The Mental Game of Gambling and The Mental Game of Gambling too. He's also an unbelievable golfer and one heck of a nice guy. Great to have you with us today, Jared. It's great to see you again.
Yeah, it's great to see you too, John, and that's a heck of an intro, so I appreciate all that. And yeah, good to see you. And I love the new format. This is a lot of fun.
Oh, good. Excellent. Yeah, we are having a lot of fun with it. We think that our traders are getting a lot out of it, and that's the most important thing, right? Is getting a lot out of the content that you're consuming. So we've got a few questions here that have been emailed in. We're gonna kind of go through them one at a time. If you're watching, we fully expect some of these questions to raise more questions from you. You can put them into the chat on the YouTube side here, and we're going to do our best to get through as much as we can. Anything you want to add here, Jared, just yet?
No, I mean, trading psychology covers a pretty large gamut. My kind of disclaimer here is that I'm not a trader, but I also wasn't a poker player. I wasn't a sports bettor either. You mentioned, playing golf at a high level. So, I kind of understand high level competition, and I'm a mental game coach, a sports psychology kind of expert. But I've been working with professional traders for a decade, both on the institutional space, retail traders, prop firms, hedge funds, you name it. I've seen traders at the very beginning all the way up to 30 plus year veterans. So, I've seen a lot in my years of working with you all. And I think one of the things that I think people have kind of gotten a lot from the book is a bit of a fresh perspective on some of the common things that traders often kind of take for granted. And, I'm sure we're going to get to a few of those points today, but I just want to kind of call that out of the gate that, there's a lot of information out there in trading psychology. A lot of it is really good. Mm-hmm. But the question is is it tailored specifically for your situation? And that's what I hope we're going to get to today, to make sure that you're utilizing the right information. Because it's kind of selecting the right trade, but being really off in your timing, that's kind of it. It really needs to be kind of customized and tailored to you in order for it to have an impact.
Yeah, it's really kind of an interfacing between what the market is telling us and what we're hearing in our heads, right? And the thing I like about your book, Jared, is there's so many action items. There's so many exercises and ways for a trader to really kind of get into their head and get into their mind and ask themselves questions. Why are certain things happening? What can I do about them? I think right now probably one of my favorite books because of all those action items. Right?
That's awesome. Yeah.
All right. So we're going to jump into the questions pretty quickly here. Is there background music? I think some folks are hearing background music.
Oh yeah. Wait 1 second.
Okay.
This is what, we're in the first couple of weeks. Let me get back to here. Thank you. And if you ever do hear background music, just let me know. I'll get it out.
All right. Okay. So, question number 1. Trading on sim seems easy, but the minute I trade in the trading combine or, God forbid, live, everything is so much more difficult. How can I calm down and trade like I do in a sim or a practice account?
So I think the issue is that you're thinking about the problem in the wrong way. The sim is like living life in a bubble where nothing can hurt you. There's no consequences. There's no lost money. Losses are immaterial. They're meaningless. It's like playing a video game and you don't really care because there's no consequence to your actions. There's no downside. The sim is not trading, in my opinion. The sim is a practice environment, but you have to still treat it the right way. Otherwise, you get bad practice. Because if you're practicing in an environment where there are no consequences, like if I go to the driving range, on the golf course, there's consequences there easily because it's either I get it in the hole or I don't, or I'm hitting it where I need to or I don't. But the driving range is wide open field, and it's easy for golfers to get seduced into thinking, well, that's okay. I'm hitting it relatively in the right direction. You need to, just like I tell golfers, like you need to go to the driving range with targets in mind so that you can get and feel the consequences, the weight of it. So when you're in the sim, you really have to treat it like it's as if it's your own money. And I know that's never going to happen equally, but the more you can create greater emphasis and priority on feeling like this is real money and the consequences are there, you start to raise the emotional temperature. So there's less of a jump for when you actually get into the live market. And you do get a little kind of practice reps that are a little bit more lifelike versus this bubble, vacuum environment where it is not going to help you to make that transition. But again, there is nothing like getting in the live market, even if you're in, just a combine, and like now the consequences matter. So you then want to start to detail what is happening in those moments, right? The data collection is that first step that I detail in the book. And really what you're looking for are the specific triggers, right? What sparks your emotions to increase, right? Is it just seeing a position that you entered recently, kind of just jackknife back down towards your stop? Or is it seeing it taking off and feeling like you immediately need to start taking profit, right? Again, detail what the trigger is. What's the thoughts that go through your mind? Can you describe the emotions you're feeling? Are there physical signs, right? Like tension in your hands, your breathing gets constricted. Your legs start tapping. You get hyper focused on one screen. What actions are different, right? Are you immediately closing that position? How does your perception of the situation change, or the perception of the market change? You're writing all of that out because it's important data that's going to help you to then figure out what is actually going on, right? We know what's happening situationally, right? Let's say you're having FOMO, right? The FOMO is obviously the problem. But what's causing the FOMO, has more to do with like kind of dissecting some of the underlying flaws, biases, wishes, illusions, hopes, dreams that are affecting your perception in that moment. So we can't get to that next layer of the underlying causality unless you are detailing out specifically what's happening. Now, if you can get that in the sim, well, then you get it for free, right? You don't have to pay for the combine. You don't have to pay maybe your own real money,
right,
to kind of get that data and then be able to start to kind of debug your own system in a sense.
So sim is, I guess it is probably like going to the golfing range, because you're not actually trying to achieve anything. You're just swinging the golf club. Or I know I'm a much better golfer on the range than on the golf course. So it makes sense that it's easier to trade when there is no risk, no accountability, no consequences, all of those things. Do you think that taking the steps, as if it was a trading combine or a real account in sim, can make that much of a difference to a trader? There's accountability. There's why I took the trade, how I was feeling. You're never really going to get the full feeling of having risk in the game in that way. But I think it's a good way to start, right?
Yeah. I mean, let's just say hypothetically, you get 20% of the emotional intensity that you would in the combine or the live market. Well, that's enough to get started, to give you a flavor of what you're going to experience in the live market. And more importantly, then give you an opportunity to start understanding and correcting it, right? You can work on it. So like when I go to the driving range, I can tell you that I am upset when I don't go through my process, or I miss my target, or like I can feel the weight of the consequences there, because I know if I can't get it right here, then what's to say that I'm going to get it right in the live market or on the golf course, right? Like, right. The practice environment has to start to be geared towards making that transition, because like there are many layers of intensity that you go through as traders, just like there is in golf, right? As you're climbing the ranks, every single time you're going to start to either maybe pass a combine, get to the next stage, start to scale up in terms of your sizing. Market conditions change, right? There's a lot of ways in which added intensity can get placed, and it's going to expose underlying weakness. Well, if you can start working on that for free, that you just need to take that opportunity. So the best golfers in the world, the best traders in the world, they are, if they're using simulated environments, right, or practices, they have purpose, they have clear ideas of what they're trying to accomplish, and bringing all of that purpose creates consequence. And so you can start to build up more of that emotional temperature in those environments because you care about getting it right. Because if you can't get it right there,
sure,
then you're kind of gambling then when it's sort of turned on for real.
So we're talking really about practice, purposeful practice, and deliberate practice.
Yep.
You can stare at a chart for 10,000 hours and learn nothing. It's actually taking the steps to be accountable and try and feel some of that risk. And like you said, you're only going to feel a part of it, but it's a good way to start building those muscles.
Exactly. Yep.
Do you think that somebody who is a good trader on sim, if they just didn't care, would be a good trader?
No, I think that's a counter reaction, and a lot of people, there's a great book, the subtle art of not giving an F. Right. That's right out there. And people kind of tend to take that kind of stoicism methodology. And I see value for it from a strength building, from a discipline standpoint. But when you're talking about dealing with real emotional issues that oftentimes are coming from these flaws, biases, wishes, right? Like expecting to make money every day, hating to lose, hating to make mistakes, expecting perfection, confirmation bias, the hindsight by all of those things cannot be fixed with a stoic mentality. Okay. You can build discipline, you can have greater precision with certain aspects of your decision making, but you can't solve these problems with that methodology. And you don't want to kind of tune yourself out to it. You want to be able to absorb the hits in an environment where they cost you very little, so you can understand more about what's going on, develop a strategy, and begin implementing that strategy.
There's too much to learn and too much good information from the emotions you're actually feeling. It's how to use them to your advantage that we're really questioning here.
Yeah, exactly. Because when you get further along, right, you want to be able to access intuition. You want to be able to access that subtle understanding about what's going on that you can't fully comprehend. And you also want to just be at your best more often. If you are simultaneously trying to be at your best, while on the other hand, kind of trying to defend against this crap, right? You have factually less mental resources to devote to being able to access intuition and to be at your best. You're having to try to do two things at once. So when you actually take, as you said very well, the information that the emotions are providing you, work through them, correct them, you create these pockets of time where you can automatically have more patience, more presence, more discipline, more focus, more creativity, more insight, more discretion, automatically. It costs you nothing. It's for free,
right?
Because you've done that back end work, which is what we call the zone, right? When you're in the zone, things are easy, but it is really hard to get to that point. So when you're starting out, you want to build good habits with that in mind a couple years down the line.
Right. Well, I don't really feel that I've been in flow or in the zone since I've been on screen trading. It's a little different, but I've certainly found, the zone or flow when trading in the pit. But the thing about it is the second you realize you're in it, you wreck it.
And you're out of it. Yeah, cool. Because having that extra layer of awareness by definition means that you're not in the zone.
All right. Excellent questions, thoughts. You mentioned impulse and intuition. So I'm going to go down to the bottom question here, which deals kind of with that. So the question is, when it comes to impulse versus intuition, how can I tell the difference? I understand it takes time and experience to develop intuition, and I've been trading or trying for many years. I just always seem to ignore good ideas. Is it trust that might be my issue? I would imagine there's probably a few things that are going to kind of pop up in this.
I would say, yeah, there's a couple things. Let's get to the second part first, which is is this particular problem about trust? And the answer is very likely yes. But what is the basis for trust? You walk down the street, you ask somebody for advice on what you should do. You hand them a live chart of the of the cues. And you're like, hey, what should I do here? It was some random person. Like, you're going to trust that person? No. But you hop into, a coaching session with you, and somebody's going to trust your opinion. Now, why is that? It's because you have confidence in the person. There's an implicit understanding about the reliability of your feedback versus some random person on the street. Okay. Now, this person asking this question very likely has a lot less confidence in their own strategy, system, conviction. And so there's an implicit distrust of their intuition, because if it's coming from me and I'm not really sure that I'm any good, then why the heck would I trust what I'm thinking? It's just like not trusting some random person on the street versus you. So if you've been trying to trade for a couple of years here and you've been, maybe on the cusp of getting there, but this thing is kind of tripping you up, I would spend some time to really detail out specifically what makes you a skilled and competent trader. Now, doesn't mean saying skilled and competent doesn't mean that you're as skilled and competent as professional traders have been doing this for years, but you have a degree of skill and competency that is valid. It needs to be understood, consolidated, and owned, because it is the basis for what your intuition, if it is reliable, is going to be leveraging, right? So spending that time actually can be really helpful. And frankly, I've done this task with traders with 16 years plus experience, right? Where they have, instances where they're not trusting their intuition. And sometimes it's because I'm sure you know this, right? You kind of go through kind of waves where your own style it goes through an expansion, like an economy. And then there needs to be this consolidation where you're solidifying a new base for which you're going to then expand again.
The inchworm.
But the inchworm is very much like, markets, right? There's expansion, contraction. So when you're expanding and learning a lot, you still kind of hold on to some of these old ideas that are kind of outdated, which also can kind of interfere with your ability to trust your intuition. You've got some of this conflicting information as you're reacting in one way, but then maybe second guessing another. You need to take some time to consolidate your skill set, your experience, your knowledge, and just systematize your strategy a bit more. So I'm not saying it has to be kind of pure algo level, but just a lot closer to being, like that, where, and my guess is that person has the ability to do that. They just haven't taken the time to really do it. Then once you do that, I'll pause for your.
No, please go.
The being able to distinguish between impulse and intuition gets a heck of a lot easier once you've done that work, because then you're going to start to either feel a qualitative difference with an impulse versus real intuition. The impulse, speed-wise, is going to tend to happen faster with either more tension, more emotion, less thinking, whereas intuition might happen at the same speed, but it's going to be more of an idea, thought, a sense, a feeling, but not like a negative feeling, like one that's more of an aha or you could have intuition that's like fear-based, right? But it's the quality of that fear is going to be different than like a fear of losing or a fear of missing out. So what we start to do is create these very distinct qualitative differences between real intuition and this instinct or reaction that is like masquerading as it. Because once you start to look at those details, you'll see the difference. It will be obvious. You just have to spend a little time to look at that.
I love what you said about that, because I've always felt like impulses yell at me and intuitions suggest.
Mm-hmm.
And with some of the work that I've done with trading psychologists in the past, the way that I was able to kind of distinguish them, and we're never 100% right on this, mm-hmm. and even an excellent intuition can be wrong. We just have to learn to accept that. But recognizing through the amount of emotion that is given to you by the impulse versus the intuition, and I find that intuitions tend to be scarier trades. They're probably harder to take, because they're in important levels or important areas of the market. So
I would say that they're also scary because you don't have full logic or rationale for why you believe it's right. So you're kind of standing out on the edge of the cliff, not really sure there's a parachute there. It's because that is what defines intuition, right? It's an idea that lacks full conscious understanding for why you believe it's right.
More of almost like a hypothesis, an internal.
Sure. I mean,
this looks good.
So the way I'd frame it is we have an ability to have subconscious pattern recognition. If we want to go into the research, I can talk about it, but I think for time's sake, trust me that it exists. Okay. And like, as you build up that subconscious pattern recognition, your mind has no access to that except when you're in the zone. And that's what you're doing. You're kind of digging deeper into your data set and pulling something out, and you're looking at it, you're like, this is an alien, but I believe in this alien. And so it makes some sense why you're not trusting it, because it's scarier for that reason too. I don't know that it's just what's going on in the market, which could be, but I think it's a little scary to like put your money or your trade ideas on the line with something that lacks like as much conviction as you have for other trades that you take.
Do you think that it's an intuition is scarier because it brings you greater responsibility for the decision? If an impulse, if you just take it, you can say, "Oh, that was an impulse. I didn't mean to do that," and whatever. So, one of the things that I've been telling people, and I think it really helped me, was before you do anything, ask yourself 6 little words. Takes 1 second. Is this in my best interest? Because I think a lot of impulses are fear and emotionally based. We hit the mouse before we even think about it. If you think about it, then maybe you'll be able to have a greater understanding of what you're about to do. Is it impulse or is it intuition? Is it in my best interest or is it not? A lot of over traders. Everything you're doing is impulse. Everything is impulse. I got to get the money back. I got to get the money. If you could just take that second, run that through your mind and say, you know what I'm doing is not part of a plan. What I'm doing is not in my best interest. Let's calm down. Let's think this through and seek out those intuitions.
So in theory, that is correct. Where the theory fails is because a lot of people have so much emotional intensity behind that reaction that the idea of taking that step back isn't truly an option for them right now. There's too much emotion at play. It's like standing on a beach and saying, yeah, I'm going to stand here and hold up a wave crashing on me. Like you're going to get wet. You're not going to stay dry in that scenario. So the emotional intensity is greater than the mind, right? The mind has a limited ability to control emotions when they reach that level. So when that happens, you can attempt it, but if it is that intense, you really need to be doing more of the work, kind of outside of trading hours to really undercut the causality of that intensity. Otherwise, in that moment, you're not going to really have an ability to stay in control or in command.
So when I first started this, I was working with a trading psychologist, and he had me doing an emotional journal. So that's what we called it. And before trades, in trades, after trades, entries, exits, I was to write down changes in myself, physically, mentally, and even emotionally. The emotional part is the hardest part of it, of course. And a lot of it tended to be very kind of redundant, but it was tracking that in very just short ways and then reviewing at the end of the day. Okay, I remember this trade. How was I feeling? How did I change internally, physically, mentally, all of those things during this trade? Kind of feel your way through it, at the end of the day for 10, 15, 20 seconds, take a breath and move on. Kind of live through the trade twice. And I think it was in doing that where I was maybe getting a greater understanding of how certain situations were being treated by me emotionally and in a fear-based way, where I was able to kind of stop myself from taking impulsive trades. The best trades are ones that they just whisper. They say, you got low risk. This looks good. You've been planning this trade. Are you going to take it? Instead of Do it.
Yep. Yeah. So,
Right.
so that emotional journal was great. It fits right in with what I was talking about with the data collection. And I think for my purposes, the data collection, the emotional journal can be a form of disruption to the emotional intensity that arises from those reactions. But we need to take that information to then figure out what's actually causing the emotion in the first place, to develop a strategy so that over time we can undercut and decrease those emotional reactions. Otherwise, you are condemned to doing that emotional journal for the rest of your trading career.
Right.
And to me, that's just inefficient in the long run. It's great in the short term. We need to use it as a long-term strategy. So.
Well, depending on your time frame and the number of trades you're taking, if you're taking 60 trades, it's not very efficient, right?
Exactly.
So this is where your mental hand history would really help with this.
Correct. Yep.
Right. This I hear a lot for the next question. Why do I always seem to blow my account when I get close to my profit target?
So there's a couple pieces here. Number one, we're talking profit target on an individual trade. You've kind of yada-yada'd a lot of the specifics of that scenario. If we're talking about like graduating to the past a certain phase of the combine,
I think that's probably more what they were talking about.
Yeah. So look, you get closer to the finish line, pressure rises, or overconfidence sets in. So there's again, when I said earlier, there's sort of different stages to the game, and those stages, as you rise, there's more and more pressure you're going to feel, which is going to draw out bigger weaknesses. That's what's happening here, and especially if it happens a couple times, then you sort of start to anticipate bad behavior or problems before they even arise, which then actually makes the likelihood that they're going to arise even greater.
You create the outcome you fear.
Well, you make the more outcome you fear more likely. You're still not creating it in that moment because the problem already pre-existed. So, right, the fact that you're, let's say, right then you have a deeper hatred of losing. So to be this close and lose is 5x the pain than if you lose right out of the gate.
Right.
Like, okay, I can handle that. Didn't really have a chance, but now like your hope, your optimism is rising as the challenge is going on. So the pain of that failure, the pain of that loss is greater then. So it may be right that the real problem is how you handle losing, an excessive competitiveness, an excessive, an illusion of control, a desire or a wish that you could be in more control of results. Those would be some of the underlying flaws that would cause that initial pain of loss or that fear of loss. And then on top of it, then you're dealing with the anticipation that scenario is going to come up again and you're going to fail once more. And then look, I mean, the definition of insanity, right? Doing the same thing over and over again,
right,
expecting different results. Then you start to think like, it's got to be me. There's got to be something wrong with me that I'm unable. No. The problem is not you. The problem is that you're not understanding what is actually happening. You see like the results in terms of your emotional results. I don't mean necessarily the fact that you're failing. Mm-hmm. You see what is occurring, but not understanding why it's occurring. And that's where the mental hand history comes in. That's where the deeper introspection to just take that step back and understand like the real flaw, bias, illusion, wish comes in.
So, Jared, I firmly believe that there could be a lot more successful people earning money trading, maybe not making millions, but at least maintaining an account and taking some money out once in a while. This question always gets me to a point, and something that I dealt with early in my trading career was, there was an old trader that saw me with a nice shiny badge on, and he said, "Hey, congratulations. Just remember, you can make anything you think you're worth." Now, if somebody is getting to close to a profit target, there's always the possibility of some sort of sabotage, because maybe this person has a fear of success or a fear of getting to that next level, because that makes it more intense.
So sabotage in my world is kind of a BS term, because in order to actually sabotage yourself, you have to be so skilled that you can cause your own demise. Okay. And
that's a great point. That's a great point.
The reality is that you're getting tripped up by forces that you don't understand. So can fear of success be part of this? Absolutely. It tends to be much more rare in my experience. Probably in the 2 to 3% category, or like people truly fear success. More often, there's a weakness in confidence, and when you kind of get farther from that base, right? So maybe deep down you're unsure that you could actually make it as a trader, right? You want to, but you're not really sure you can. And some people, unfortunately, believe that they need to actually believe they can do it. When you don't. I don't care if you believe that you can be a profitable, successful trader. I just want you to do the work, put the time and energy in, give it all you got, and then see where the chips land, right? But belief does not have to precede outcome. That is not a causal factor. But many people believe that they need to believe, and when they don't believe, then they feel less confident. And so then, as you said, right, they get on the verge of kind of passing this combine and being more successful, and it's almost like they're kind of climbing up a mountain with no rope. And so this sort of risk feels a lot greater of failing, because now you're going to kind of crash and burn, and
the higher
versus
you go,
just drop a little bit and kind of feel that little bit of pain.
The higher you go, the more it's going to hurt.
Exactly.
You said something there, Jared. It's absolutely genius. I can't believe I didn't think of this before. And this came from a trading psychologist. It was, let's say you put together a 2 weeks of positive days in trading. If you don't feel as though you really deserve it, you're going to find a way to give it back. But does anybody have really the skill to ensure that they're going to give it back, that they're going to create losing trades? There's something flawed with that, isn't there?
There is. And so what happens is you're emotionally compromised. You're not thinking properly. You're sort of like falling back to the level of your training, right? We all know that quote, right? We don't rise to the level of our aspirations. We fall to the level of our training. So under that kind of emotional intensity, we are going to go back to our basic weaknesses and flaws. And so then, you're just naturally going to make a lot of mistakes there. But if you look at like the best athletes in the world, the ones that are the most successful are the ones that are really, really strong when they're weak, right? So they're not going to fall that far. They're going to be able, like, best example I can give you is Tiger in his heyday, right? Like early 2000s, was easily 2 to 3 shots better than the other top 10 players in the world when everyone was playing their worst. I mean, it was night and day. He had a massive, massive lead there. But you put them all together, everybody was playing great. Maybe he's like a 1/10 of a shot, maybe a 1/4 of a shot better. That's not what made Tiger great. What made him great was how strong he was when he was weak. And so that is what prevents what appears to be self-sabotage.
I think Tiger made people think he was weak when he was strong.
There's probably that too.
I think I did that in the pit a couple of times. Just make people think you're weak and then come at them. All right. Here's another question. I have a tendency to overthink and ruin good trade ideas. How can I keep my analysis constructive and just take the risk?
So it's very likely that is fear driven, right? So fear can like drive the mind into overdrive. Anger often drives the mind into shutdown, right? We like stop thinking and just react a lot more out of anger than we do out of fear. So fear drives the mind into overdrive. So part A would be try to better understand what the heck's going on, like what is driving that, based on a lot of those things we've already talked about today. But pragmatically speaking, like the way that your analysis falls apart is going to tend to occur in patterns, right? You're going to forget to look at certain factors, or you're going to overthink certain factors in a certain way that feel very new because it's probably different trades, different setups. But like you look at it like net over each one, they're basically the same thing. So once you can see the pattern in the way that your mind is deviating, you can start to force yourself in those moments to call that out and then correct it by defining what proper decision-making looks like. And as a trader, your decision-making process is your technique. It's equal to my golf swing. It's equal to the technique that you see in athletes. Yours is a decision-making process that exists internally. So we can't see it, except we can see the output of it. So just to recap, dig down, find out what's driving the fear, be really pragmatic about the specific way your mind is overthinking and deviating, and then define what quality decision-making looks like and train the crap out of that, especially at other times too. Because if you get good practice on trades that maybe don't cause you to overthink, still kind of overdo the thought process using that decision-making, in a very kind of orderly fashion, so that it becomes practice for those moments when it's more intense.
Okay. What about just taking the trades if the risk is within your risk appetite? I mean, if you've got a trade and you think it's a good idea, if you overthink it, I can talk myself out of any trade, but if it's got that kind of intuitive feel and the risk is manageable, I'm going to take it. It's
anytime somebody uses the word just, my ears perk up. Because if I could just, it's oversimplifying the complexity of a situation that is recurring. My guess is any of these questions are not ones that have happened one time. They've happened again and again and again. And likely they've tried to just take the trade, right? It's let me just jump off the cliff and push myself off. But you get there and you've frozen and you can't, right? Because there's too much emotional paralysis preventing you. So if I could just take the trade is actually a really, really harsh and punitive statement for an emotional problem that's being misunderstood and being labeled as something that's probably more like discipline. I heard you guys talking earlier, right? We want to make sure, right? I agree with 90% of what you all were saying. The caveat is you got to make sure that what you're defining as a discipline problem is actually caused by mental weakness, out of fatigue, out of a lack of connection to your goals, out of some focus issues versus emotional issues that are causing you to violate your rules or to avoid taking these good trades. That is not a discipline problem. You cannot just push somebody into that unless they've got a strategy in place. Well, because you do it once, and then you're either going to get lucky or you don't with the outcome of the trade.
Right.
And eventually, you're not going to kind of create a longer lasting sense of progress that way. You got to really develop a strategy and then use that strategy to create a better decision-making process, a better form of execution. And once you have that, if you're still then struggling to do it, then yes, I would say overdo it. Just take the risk, give yourself, 10 trades where you don't care about outcome and just get a little bit of research just to feel what that's like.
Yeah.
At that point, that makes sense, but not before then.
Not the word just.
Not the word just. Yeah, it's a fantasy word.
It's a 4-letter word,
Right.
Everyone says plan your trade and trade your plan. How can I do this with no knowledge of the outcome?
You're in the probability game, right? And what that means is you have to get better at dealing with uncertainty. And on some level, it's kind of like dealing with loss. You got to get better at taking a punch. Here, you got to get better at dealing with the inherent uncertainty that exists in trading and, frankly, the world. So one of the cool things I like about psychological research, a lot of people don't like it because it's fuzzy and whatever, but by and large, every psychological research paper that's been produced, they have a confidence interval of 95%. They say, okay, we believe that with 95% confidence that what we found in this research is correct. They always leave open the opportunity to be wrong. And so research becomes more valid when you take 50 of those replicated research studies and everyone finds it. So 95% times 50, you're converging on certainty. So as a trader, though, like you never have 100% certainty about outcome. Maybe if you're lucky, you've got 70% certainty. And so part of this is just really embracing, and here I use the word just, right? Part of it is embracing that inherent uncertainty and conditioning yourself to it, not as something to be avoided, but as something as actually embraced, because the better you can embrace it, the better you are versus your competition, which is a lot.
Yeah, the plan your trade and trade your plan. I mean, markets are always changing. The plan is going to change. You know, I mean, for me, it's all hypothesis, because it's an educated guess as to what the outcome is going to be for anything. So I think treating it that way makes it a little bit easier for me to deal with things don't play out my way. And, you know, like you said, Jared, I mean, there is no known outcome to anything we're doing in these markets. You're in the probability game, like you said. And so, you know, planning your trade and trading your plan is putting a trading plan together that relates to the current market state, a hypothesis of that market state, the context of the current market state, and then look for the triggers that are going to kind of create that opportunity for you. And, you know, as long as you're limiting risk, you're going to be taking losses. You're going to be taking winning trades, hopefully, right? And so, you know,
the way I would maybe pitch this for audio is like, think about yourself being the casino. You know, casinos have like massive bankrolls to support short-term volatility, you know, and their edges generally are fixed. You know, slot machine's going to pay out to the casino, let's say, you know, 8%. Blackjack pays out, you know, 1.5 points. Right. And so you got all these probabilities, but like on the daily swings are massive, and they have, right, their risk managed, because my God, if they had, you know, only 5% of the total amount being bet as part of their reserves, like one of those days that casino is going belly up.
Right.
So the risk management for you all is that, like, you're the casino. The difference is that your edges aren't fixed. Your edges are determined by how well conditioned you are, right? You have a slot machine on the floor that's breaking down. The floor managers are rushing to rip that thing off the floor.
Oh, yeah.
But how many traders are willing to just kind of keep gambling, hoping that they, as that slot machine, is going to start to pay out? And it's so I think when you kind of can flip the script here and say, all right, I'm the casino. How would a casino operate here? That's where the risk management parameters really start to, you know, kind of create the safety net for you to be able to trade your best, and then to be able to understand what it takes day in and day out to be well conditioned throughout the day, or if you need breaks, like that's a whole different, you know, kind of calculus to figure out.
It's a really good way to put it. I mean, we're telling people to keep the math on their side all the time, and that's exactly what the casinos do. They know over time they're going to get a certain percentage of every bet that's placed in there, and that's how they
just look at Vegas. Vegas was the size and scale of those buildings were all built on the back of casino gambling.
Unbelievable, isn't it?
They're getting paid. So you want to do the same thing. You got to treat yourself and act like
yeah. Maybe we'll build ourselves a casino one day. Well, we do have one more question here. If you got another minute, we'll see if we can bounce this around a little bit. If I'm down money and I get it back the same day, I find it very difficult to continue trading. Is this just risk aversion or something else going on? I feel like if the market offers opportunity, I should take it, but the mouse just gets too heavy to move. The same thing happens when I'm in profit. I guess I just can't bear the thought of losing.
So if we've got time to share my screen, I'll pull this form up, because I think it'll help to frame this, the answer here. Let's see here.
Let's see if we can get that up there.
Yep. So yes, there is risk aversion. And let's see, entire screen. There we go. All right. So this is what I call an A to C game analysis. And the A to C game analysis is basically a tool to chop up your game into 3 levels, right? An A game, a B game, and a C game. And when you do that, you start to become less results based and more focused on your own execution. And that execution, is really what matters most, especially in a situation like this, but obviously for traders in general. So when you can see that you actually have been trading quite well throughout the trading day, even though you've taken out a few losses, well, then the question becomes, can I continue to execute and sustain that A game level trading? But conversely, if you've maybe taken a few bad trades, you can see that you're in like your B and C game, and yet they've been profitable. Well, then actually you should be more cautious in that scenario, not because of the results, but because of your performance and your execution. So what the A to C game analysis effectively does is it chops up your mental game, right, and your tactical skill, right, and looks very pragmatically about the differences, which need to be very clear from A, B, and C. The mental, tactical, I'm kind of less concerned with. You want to be able to very quickly during the trading day get feedback that's reliable that says, I'm trading great, I'm awful today,
Right.
or somewhere in between. If you get that feedback, the answer to that question is made a lot easier, because then it becomes a lot less about the P&L on the day and more about your own execution, your own mental state, your own performance. And that's a more reliable way of making decisions about when to take breaks and when not.
Excellent. So this trader, I mean, is probably spending most of his time in his B and C game.
I mean, likely. I think in general, a lot of traders probably at the level of the viewers here, that is the case. And in part of that is because they are reliant on short-term results to get them into their A game, right? They need to get a couple wins to feel good. And then once they feel good, there's like this kind of very fine line before they start to, win too much and then start to underperform, or, they sometimes need to lose like once or twice to kind of get them focused and motivated, but they lose too much. Then they lose hope and get, more FOMO or revenge trading.
You got to get their attention.
So, the fine line is really thin. And there's just not as much reliability yet because they don't have firm command over their preparation, their mental state, and that's kind of what they need to work on more of in the long term. But the A to C game analysis at least gives you a way of orienting yourself within the trading day about how to make, I think, better decisions about when to take breaks, when to keep pressing, when to stop. Because mean, there's clients of mine who, they've determined it's not like a daily loss limit that necessarily takes them out of the game, right? It's more execution based, right? When they reach this level, they have to take a 5-minute break. If they come back and are able to perform, and they reach that level again for the second time, it's a 15-minute break, right? And it's an hour break, and then maybe they're done for the day, even if they haven't even taken a trade or maybe even taken a loss.
Right. I think that's a really cool way to think about it. I know rarely am I on my A game on Mondays.
A little bit of rust, a little bit of
just getting back into it, the thought of everything, doing all the homework on Sunday and Monday morning. You think you're ready, and typically my performance is not as good, although that's been changing a little bit. I'm kind of pleased about that, of course. But
awesome.
Well, Jared, thank you very much. Your knowledge and your thoughts and ideas are so immensely valuable to everybody watching today. And I can't wait till the next time we have the chance to talk. Thank you again very much. How's the golf game going?
Golf game is shut down for the season, but I finished 40th in the Philly Open, which I was pretty happy about. I was actually technically leading the tournament after 5 holes, but just kind of made a couple mistakes and then made a big mistake, but rebounded and played pretty well the rest of the way. Came close to qualifying in the U.S. Mid-Am, which was the big tournament that I'd eyeball for the year. But my big goal for the next 9 months is to get myself ready to go for next season and make another go at it. So
I want to see you on the top of the leaderboard one of these days.
It's gonna happen. It's gonna happen.
All right. All right. Blessings to you, Jared, and we'll see you soon. Thank you very much.
Absolutely. Good to see you all. Thanks for having me.
And welcome back to group coaching. I'm Eddie Horn, and of course, we've got Coach Paul here. Paul, one of our all-star coaches, and maybe you have had him for the one-on-one, but what we're doing here now is we're bringing on the group coaching, our coaches, to help everyone. And Paul, how are you today?
Good, Eddie. Yourself?
I'm pretty good. Had a very good day here watching Hoag and Michael trading this morning, and of course, Jared's segment with Hoag. So good stuff today, and I'm really happy that we can sort of follow this up with you, my friend.
Yeah, it's an honor to follow Jared, one of my favorites. If you don't have the book or you haven't checked them out, do yourself a favor. It's very enlightening. Jared, I read his book about 2 years ago, and I was stunned. I've been around for 4 decades, trading 30 years, and that he really helped me with my mindset.
Right.
Excellent stuff. I mean,
well, the mindset in my book, which I haven't written yet, is the number one issue. I mean, that's got to be straight and focused and ready to go before you even turn on your computer, before you look at charts, before you figure out your game plan and so forth. So, I mean, it's very important. It's an honor that we do have him with us. But anyway, we've got you with us right now. And, Paul, for some of those that do not know who you are, who are you, what are you doing, and why are you here?
I'm a coach here at Topstep. I've been in the markets for, like I just said, 40 years, 30 of that trading. I've had many different roles in the futures trading business, and a lot of experience and a lot of failures. One of the things as we're going to cover today and on FOMO is fear of losing, fear of missing out, fear of failure. These fears drive our decision making. And when our decision making is based on fear, it's usually not the best decision. So coming from a world of the floor and then transitioning to the screen-based trading was a lot of I needed to educate myself in a completely different manner. Being here in front of a screen without, I really enjoyed the crowd. I enjoyed the noise and the action. And being out here by myself, really in my own little world, the emotional aspects of trading really, really came to light. How you can deal with loss when you don't have any other way of having a group in a pit. You had guys who could catch you, like Michael Patak talks about it. He was talking about the other day. One of his mentors looked at him and hit him in the ribs, like, "What are you doing?"
Right.
And when we're off in our own little world, we can really get lost, and it's really, in my experience, it's fear-based decisions, and how to deal with that. So in today's session, we're going to cover fear of missing out.
Paul, let me ask you something real quick here before we jump in there. Your transition from open outcry to electronic trading. I'd like to ask this question to a lot of traders that have had the experience with screaming, yelling, kicking, and screaming for a one lot rather than just clicking a mouse. How was your transition there?
Well, the transition took me a few years. One of the keys that I found out in the pit was the noise level. When I was in the bond options, and the bonds were rocking, that was just in a massive pit, and I mean, it was thunderous. And if there was a move after a number, let's say an enjoyment number, as we used to call it. And it'll be a massive, thunderous move. And then I got the key was it would just get quiet after a certain amount of time. It was spooky kind of. It just got really quiet, and I knew that move was over for that time period. And then I would just make a trade based on that. How I not having that on the screen based, I had to use it with charts. Now, one of the things here we have a chart in front of us all the time.
Yeah.
So using charts, developing a system, a plan, I tried to replicate that in other ways. One of the ways that in using a chart and staring at the chart sometimes can be a real advantage if you let it be. So I had to trust the charts. I looked at charts when I was in the pit, but those were daily charts to get an idea which way the market was moving. But in the pit, it was execution in the moment, looking for an edge that you could get.
Right.
The edge on a screen-based platform is completely different. You really, I've given it to the point is I'm going to give up an edge to get in.
Right.
I'm going to give an edge to get out. So my risk management is a lot different.
Okay.
You could get away with doing a 10 lot easily if you could see a place where you could match it. Like
Right.
someone's bidding on 100 and you can lean on that order and you could do a 10 lot and you're quick. The old saying, it's a young man's game.
Or snooze, you lose.
You snooze, you lose. There's the quick and the dead. All of those, that is not available on the screen.
Right.
So being able to trade in a completely different environment, being able to determine when I was willing to enter a market, exit a market, my risk management, all of those were a much different game. So that's when I just developed a trading plan. That plan is a key in this environment.
Definitely. That's something that, you come unprepared, expect to get results of being unprepared. Especially what we've got everything in front of us. But no, I just wanted to ask you if what the transition was like, and it is a night and day thing. Still playing the same game, but like I said, it's night and day. But anyway, Paul, let's get on with our FOMOsity, FOMOpalooza, whatever you want to call it. But let's get into that. Now, remember, for those that did email questions in, those are going to get answered first, and I'm going to open up questions now here in our YouTube. If you do have any questions, by all means, please don't refrain. Let's hear it. So what do you got, Paul?
Okay, our first question comes from what is the name? Fred.
Hey, Fred.
Okay. He says, I heard the subject of today's group coaching session is fear of missing out. One recent problem I have had is tightening my stops. Do you think tightening my stops is a form of FOMO? All right, goes a little deeper. No matter how confident I am in my trade, I experience anxiety while I am in an open position. I walk away from the screen once I'm filled so I don't get shaken out of my trade. When I come back to the screen, if my position is still open but in profit, I tend to tighten my stop so as not to lose money on the trade. I realize the market doesn't care about my profit or loss. market structure is more important for evaluating my trade. I don't tighten my profit target. I move my stop to break even. My motivation is to relieve anxiety, but anxiety relief is costing me money. My stop at break even gets hit many times, so I want to get better about not tightening my stops. So this is a big question, and this is very common, and it's part of the trading game. So let's answer the first part. Fear of missing out, moving your stop. To me, fear of missing out, let's get to the term fear of missing out. In trading refers to the emotional and psychological phenomenon where traders make impulsive and often irrational decisions due to a fear of missing out on a potential profit. Okay, that's two key words here. Impulsive and irrational. Now, with Fred and his question is, did you make an impulsive entry into the trade? I don't see that in the question, and maybe you did. If you made it an impulsive, that was like, and in my own experience, I've done it many times. Okay, I'm waiting to, let's say I'm waiting to buy, and it doesn't get into my setup, my plan. So I abandon my plan and just jump in. Now, is that irrational? Yes. Is that fear-based? Yes. Fear that I'm missing out. In Fred's experience, he tightened up his stops. Now, Fred, I would ask you, is that part of your process? Do you move stops up, or you just wait for the market to move and then either hit your stop or get to your target? If you're moving that stop up because you fear that you're going to give away profit, then well, that's FOMO. That's a fear-based decision. I would encourage you to keep your stop where you got in and look for different information to get out other than if markets develop. In my case, I have a moving average and I put my stop in, and if it stays above that moving average, I'm staying in unless it closes below it if I'm buying. Then I'm out and I cancel my stop. But the basic question is, you're experiencing anxiety while you're in an open position. That is the game. Do you trust your trading process is my first question. And believe me, I don't know if that anxiety ever truly goes away, because one experience I've had here, which is great experience, is that here at Topstep, we have traders from literally all over the world, every continent except for Antarctica. And the one common thread through all of those people and all those countries and all of those cultures is we're all humans. When we enter a trade, we are entering into the realm of uncertainty. It took me till recently to really understand that the only certainty we have is uncertainty. So when we're in an uncertain environment, anxiety is bound to happen. And actually, I go through it still. Today, I bought natural gas, the Widowmaker, right?
Right.
I have my stop in. It's a good trade. But, even now I want to peek in to see where it's at. That's the anxiety. Now, if I go in and I change my plan, I get out because, well, I just want to take profit. Well, then that's a fear-based decision. My plan is a little longer. Where's it going to close? If it hasn't hit my stop by the close, in my situation, I'll keep it because I'm in this account. It's a swing trade, and then I can move my stop up to unchanged. But if I move my stop out right now and I tighten it up, I'm getting away from my plan. If I get out just because it's a profitable trade, then it's a fear-based decision. To get the key to long-term success, if you look through, and I've seen many great traders, I've seen some poor traders. I've seen poor traders in my own trading. I can get consistent for a short period of time because I just happen to be on the right side. Now, can I make that consistent over time? That's what a trading plan is for. I truly believe that executing a trading plan is our focus as traders. Without that, we make emotional decisions. Emotional decisions getting in, fear of missing out. Like tomorrow will be a classic example of FOMO. It's a very timely discussion. What is tomorrow?
FOMC. Yeah. I didn't know you were asking me.
Yeah, I am.
Quiz time. Did I get it right? I don't know. Did I get it right?
You got it right. Ding.
Oh, I didn't.
All
Yes, I
right.
did.
So, Fed Day, it's fraught with anxiety. It's fraught with volatility. Now, personally, I happen to be short stocks. I hedged them up today to get delta neutral, and I'll hold those through tomorrow. If I'm day trading, and this is our audience, I won't trade it. It is fraught with FOMO. By the way, from my experience on big days, market makers shave down their positions, or as we used to call it, they put their hands down. They're not participating. So on a day like tomorrow, and if you've been trading this, what happens? The initial reaction, it's a big move one way or the other.
Right.
And then, okay, it's got to be good. And then you get on it, and what happens? Unless I have a plan to execute, to take the risk that I can afford to take. Key word, afford. Can I afford this trade? Which means, where's my stop going to be? Does it fit my account? Earlier today, we're talking about accounts. Are you trading your account? To me, that's without your risk capital, you can't even participate. So tomorrow, it's going to be fear-based trading, and for most of the day, until the news comes out, and then of course you have to have the press conference afterwards, which drives out more fear-based trading. That is a classic day of FOMO. So my suggestion is, let's ask about what is our role as traders, day traders. We're not there to make markets, are we? We're there to make money and to trade our account. So if you've been trading this before and you have experience in it, you have to be right on in your execution. All right. You have to be right on your emotional decision making. I mean, that asks for a lot. If you can do it and you can make decisions like that and have your risks in order, your stops in order, and have at it. But my experience, you have to be 100% into the game.
Right. Agreed. Yeah.
So going back to the FOMO and going back to Fred's question, keep your stop at its original. Let the market play out if that's part of your plan. If you're just moving your stop because you don't want to give anything back, which is not part of your plan, I highly suggest keeping it where it is, let the market play out. If your trading plan is good, let it play out.
Right. And you know, Paul, what happens a lot of times is we're sitting there watching it. You know, I had brought an idea from working at First Chicago on the phones where, you know, you'd have Deutsche Bank or RBC, Royal Bank of Canada, give you a big, like 500 contracts, 1,000 contracts, 2,000 contracts. And, you know, obviously it wasn't your money, but you were responsible for getting that done. And the thing is, they would say, you know, spread it out a little bit, have it done by 12 o'clock, and it'd be like 9 o'clock. But you would put the orders in, and you would go about doing something else, maybe putting some other orders in for other clients. And it would be something where I wouldn't be watching it, but I knew it was in there. I knew I had, you know, prices and exits and so forth, and it wouldn't worry me too much. And I sort of transitioned this to some of our traders where you're sitting there and you're watching it, and this FOMO just starts to keep building up and up and up because you're watching it. Maybe it's going against you for a little bit, but you know, sometimes as long as you got that stop in there, as long as you got your exit in there, rely on it, right? Give it a little confidence that it'll play out, and you don't have to watch it and babysit it. And I mean, you know, pull out a crossword, pull out a jumble, do a Sudoku, you know, have a book handy, read the breaking news, but don't let it pull you in, which I've talked to a lot of traders, which that's what it's done. It's sucked you in to jack up the volume on that FOMO.
Great point, John. I was also
Eddie.
Eddie. Did I say John?
You called me Sally. You said Sally.
Don't call me anything. Don't call me late for dinner.
You could call me Johnson. You could call me. Okay. Yes. But
so execution. That's a really good point. I was also an execution broker for many years, fulfilling orders. And I liken following a plan to being a good execution broker. So in our plan, a good plan, they're all very similar, right? Risk management is number one. Cutting your losses, letting your winners ride, preserving your capital, don't have wild equity swings. Those are the principles. So in our plan, we cover at least you know, in a good plan, we cover that. So and that covers the entry, the exit, the risk management. Once you have a plan, and it's a good plan, I'm just executing my plan. It's almost like I'm a third person. I liken myself when I was filling orders. It's not this is what I have to do, get it on, let it go.
right.
The moment I start watching every tick. You know, that's what happens in our subconscious. we start getting lost in it's against me, it's for me, it's getting what I call a cheerleader mode. And if you're staring at it, it's going to be hard not to be a cheerleader, right? So confidence comes from putting it on, following the plan, and like you said, go get your attention on something else. Check in on it every 5 minutes, not every tick.
Right.
I personally use a half hour. I check every half an hour. All
Cool.
right. And
It's healthy.
Go
Right.
ahead.
No, I mean it's healthy. It's just like I said, it sucks you in and so forth. You don't want to do that. Let it do its thing. You've gone through your game plan. You've put it where you want it to be. You've set your stop where it should be, and let it do its thing. All right, the market's working. It's like I said, it's very unhealthy to be watching tick by tick by tick by tick by tick. Anxiety, stress. Especially if it's going against you.
Well, especially when it's going against you. And one other thing is we go back to FOMO. FOMO can also cause us to disregard risk management. I'm missing out. So that patience to get your trade, all right, to get your plan executed, would throw that out, and then you ignore that. Hey, I'm taking more risk than I can afford, or I'm not even putting a stop loss. I have to get in. It's like I call it chasing.
Right.
Part of that, and I've suggested to my traders is, this is part of that checklist, like Jared talks about. Me, in my emotional checklist is when I'm going to make a trade, I have a checklist. Is it meeting these goals, or is it meeting these standards? Can I afford this? Is this trade part of my plan? If I can't put that into the trading plan, then it stops me from just entering it. It helps me stop the FOMO, because I'm only human, right?
Right.
So part of that ignoring risk when we're chasing trades is part of the FOMO. It goes back to, again, having your plan and having a checklist. Check yourself. Are you in a hurry?
If you are, you shouldn't be trading. That's one thing. Plan ahead.
Well,
plan ahead.
A great example is a sports example. I'm also a basketball coach. And in sports, if another team can hurry you up, and you're making it's the same thing in FOMO. If I can hurry you up and you make bad decisions because I'm hurrying you up, then I've got a big advantage.
Right.
Getting hurried in any sport is not what you want.
Well, NFL, they've got the play called the hurry up offense. Exactly.
Great point. Yeah.
Quick, get out there. They're not ready. Let's go.
Let's go. We're going to hurry them up. They're going to make bad decisions. They're not going to be ready.
Good stuff. Good.
All right.
Now, Paul, we got any other email questions that we can get to? I know I've opened up questions here.
Why don't you go to your questions? So we have time on
all right.
Timely.
Let's see here. JD was asking, how often do you see your edge shifting? Days, weeks, months, depending on a particular condition of the day? And do you have a documented playbook or trade intuitively?
Good question. Let's start with the intuitiveness. I don't trade intuitively. I have documented trade the specific trades I'm looking to execute myself, because my experience, I've traded everything. I've been in just about any market, from lumber to pork bellies, you name it, except for butter, because I wasn't at the mark. But I'm looking for that in different markets. So it's not, I myself am not a good intuitive trader. I can get highly emotional. And as soon as I'm emotionally trading, I lose my rational, I lose my rational analysis and I'll panic. So myself, I need to, I'm not good at, I'm an emotional guy. So I have to rein that in. That's, to me, a good trading plan takes care of all that decision making when I enter.
Okay. IPS Warrior saying, it's good to be uncomfortable when you're exposed to whims of the market. You should be uncomfortable. The task is to make it worth the discomfort more often than not. So, I mean, it'll keep your attention. That's for sure. That's like driving in a lot of traffic. You're not going to just sort of lay off and then not pay attention to everything around you. I mean, you've got somebody in front of you, two people on the side, somebody in the back. So you're going to be more attentive. You're going to be more aware. And obviously, you're going to be uncomfortable.
That's a good point. Anytime you're entering risk, there's an element of being uncomfortable. And that heightens our emotion. It also heightens our ability to execute. So getting that edge, being able to take being uncomfortable. And what is being uncomfortable? Uncertainty, right? We as humans, we crave certainty. To me, one of the things that drives me to madness is the quote, the market, especially in the stocks, the market looks for certainty.
Mm-hmm.
There is no certainty, but the certainty is not risk. And so being comfortable with that is key to good trading. It also, that gets your edge. It gets you to react, and react with a plan gets you your edge. So your edge does change. It's a constant process. Markets move. So the ability to be uncomfortable and literally enjoy being uncomfortable, because uncertainty is uncomfortable. So that is the edge, is being able to trade and make consistent decisions while being uncomfortable. That's how you become a good trader.
Right. Right. I mean, we're not, we're talking being attentive, paying attention more than usual. I mean, we're not talking about putting a porcupine in your underwear uncomfortable. We're talking about, what you got to focus. It's like, taking care of an infant, a newborn baby. When just had a granddaughter yesterday, and it's going to be my turn to watch her soon. And I mean, you've got to be focused. You got to be focused. Mugda Muli says, or is asking a question: how do you trade with confidence? I find myself in analysis paralysis.
All right, confidence with faith, right? Confidence, experience, the experience of being able to enter risk with the concept that you can take losses easily. The concept of loving your losers, being comfortable taking loss so you can let your winners ride. That comes from experience. It's literally, it's counterintuitive to the way we're raised, right? in school, because in trading, you're going to be wrong. Me, I'm wrong more than I'm right. And it took me a long time to come to that terms. Because in school, what did we get punished? You're not, you gave the wrong answer. We don't tend to learn from our losses. We just try to be right. So being able to,
that was a tough school. You get a wrong answer, you get punished.
You get punished, right?
You're not
what school
did you go to?
The next grade. You're going to get a C. Right?
That's it. I mean, I went to school with nuns, but I mean,
Oh yeah, the ruler on the knuckles. That was a literal thing. But learning in trading is counterintuitive because we don't want to be. We want to have to be right, and that leads. In trading, that leads to a lot of problems. Just being able to take a loss and go, okay, I'm wrong. Boom. Let's look for the next opportunity. Can you do that consistently? That's where consistency comes from. That's where good traders come. Best Loser Wins. Great book. Read it.
Right. Okay. JD says, thanks. All this psych talk. I just feel like traders hide behind randomness and cliches rather than having an explicit edge or strategy. Good. Like
very good point.
Yeah. We do that, but sometimes we don't realize that we're doing that. No. Fear of missing out. I mean, it's a common emotion. This morning, Michael MP Patak. I mean, he said the FOMO. He's got the FOMO. I mean, we're seeing markets move. We all have that. That sort of built in to the human nature of FOMO. It's like you see the neighbor. All of a sudden, the neighbor has his lawn done by professionals, and it looks beautiful. And you're looking at your lawn, and you're saying, you got dandelions and weeds, and it's like, you've got that sort of the FOMO, fear of missing out. What did I miss out on? What do I need to do? What can I do? And as you can hear in my voice, there's a panic. There's a fluctuation of I need an answer right away. I gotta fulfill something. I gotta, it's something that you need to sort of step back, take a breather, say, okay, what do I need to do? Should I do that? Should I go get my front lawn done like his? How can I get that front lawn done like his? And plan it out. I mean, just don't jump at the first answer. I mean, make sure you're accepting and you're willing to take on the best answer that you find fit for that situation.
Good patience, right?
Patience. Yeah.
And FOMO is the antithesis of patience, isn't it?
It's the freak. I mean, Rick James, super freak, and that's exactly what it is. You're super freaking.
Yeah.
It's a panic. It's a panic.
It's a panic. It's funny. I had that one. That's patience is a virtue, right? And what I would say FOMO is, and I kind of stole this from a Talking Head song, which I could have got the lyrics wrong. Was patience is a virtue, but I don't have the time. Right?
Yeah.
That I use to this day is like if I'm not a patient person by nature.
Yeah.
I think I had to develop it. Actually, there was a painful process, is because without patience, I would chase things. So, there's that saying, I don't have the time. I got to get this done now. If it's going to go higher and I'm trying to buy it, and then I get in, now I have, what's my exit? Wait a minute. How much am I risking? Wait a minute. I can't take that loss. It all starts, being impatient starts the lists of failure, of wrong decision making. So that's why I can't say it enough. Get your plan, understand your relationship with the market, relationship financially. How much is this going to cost? Is this part of my risk management? Can I afford this? Is it part of my plan? Why am I getting in?
Mm-hmm.
So patience, and also her patience and being is random decision making. You just said it. That leads to these emotional traps.
Right. Have your plan. I mean, have your commit. And that's another thing that's hard in trading is committing to your plan, your rules, and sticking to it. I mean, I can plan out a day. I got a game plan, but we tend to sort of veer off that path, thinking something is better. It's going to be better, and and honestly, sometimes it might be, but usually the odds are against you because you're sort of winging it. You're hoping. You're doing the hopium thing. You got your fingers and your toes crossed. Oh, I hope this happens. And I don't know how many times I've did that while trading. Come on, please. Come on, market, turn around. And it doesn't. And now you're sitting in a hole deeper than you were before. And, the question is, how do I get out of it? All right. Then you panic again. I'm in this hole too deep. You start chasing markets. That's one of my friends once said, FOMO, fear of missing out. If you miss the first bus, don't worry about it. There's going to be 15 minutes right behind it. Okay. There will be another bus to come. You miss it, or sit, relax. All right. Be patient. All right. So, another bus is going to come.
Great example. I had one. We talked about hope and prayer. When you're in a losing position and you're ignoring the fact that you're losing and you didn't have an exit strategy when you got in, from my experience. So then I had a friend, an older trader, successful trader, and I was in the pit, and I had the look on, it's that look of the deer in the headlights, I guess.
Yeah.
And he looked at me and he knew it right away, and he goes, yeah, you're in a position and you're hoping and you're praying, aren't you? I'm like, yeah, I didn't want to admit it. Yeah. He goes, well, you can stop praying because God's on the other side of your trade. He's perfect and he is not letting you out. I'm like, oh, it just woke me up. And it was like, okay, that hope is not a strategy. I got to get out. I mean, and regroup. Like, it's really important to regroup, to get back to to a stable mindset. It's not easy. That's where patience comes in, and patience can, as an example, you can develop patience. All of us can.
Right. Well, fear of missing out. It's a deadly trading disease. I mean, things that help. I mean, make sure you got a trading plan. Make sure you set clear rules. I will follow these. And, even if you have to, when you're getting ready in the morning, you're brushing your teeth, combing your hair, whatever you're doing, look in the mirror. Look at yourself in the mirror and promise yourself, I will follow my rules today. I promise you. Okay. I know that sounds sort of corny, but you know what? I do that every once in a while. And just looking at yourself, promising yourself that you will do something, at least it helps me. Give it a try. It might help you. Another thing too is limit order types. Okay, limit orders that you specify at the price. Make sure that you want to buy or sell, so you're not having, like you mentioned, that impulsive decision. We talk about risk management. Okay, we talk about position sizing. How about mindfulness and self-awareness? All right. Check on yourself. Have that checklist throughout the day. How are you doing? How's my focus? How's my mindset? Am I being positive today, whether my trading's good or bad? And this is going to tell you if you're falling into that sort of, I shouldn't be doing that, or I'm going to be doing something reckless. So be careful there. Education, preparation. Another thing too is support networks. And what I mean by that, connect with other traders like Coach Paul. All right, we're connecting with Coach Paul today to provide guidance and support when dealing with FOMO. talk it out. All right, journal it. Put it in your journal. Michael did that this morning. He was talking about having a class where he was writing things down. Write these things down, because if you're writing them down, it's something that is affecting you. And, don't be a superhero. All right, open up, because that's the only way you're going to be able to fix or fine tune or adjust what needs to be done. So I'll get off my soapbox. Sorry, Paul.
Well, it was very good advice. I can't say it enough. Because in our beginning of our discussion today, we talked about the transition. We're out here, like me, I'm in my little office, and who am I dealing with? When we talk about FOMO, we ended up fighting in the market, right? And the market, by the way, is never lost. It's never lost.
Yeah.
So who am I really fighting? Myself. And this, and it's really important. You talk mindfulness. Is one of the good points was out of Best Loser Wins, where before the trading day, he envisions two types of days: winning days and losing days. And in that, he envisions himself taking good losses, or letting a winner ride, or adding, in his case, adding to a winner, executing his plan. So that when the time comes, he's emotionally ready for the experience. That's really important.
Right. It is important if you want to be successful. I was just, I was coaching. I mean, my 13 years here at Topstep, and I've talked to thousands of traders, and that can destroy a mentality. Wipes out confidence. It puts a bad taste in your mouth where you don't want to try that again. And it might take you a while. But, what they say, it's not how many times you fall off a horse, it's how many times you get back on. And that needs to be front and center as a trader. And I learned that the hard way. I kept falling off the horse and kicking the horse in the ass and walking away. But the thing is, you got to get back on that horse. Okay. You got to get back on trading. Even if that trade that day before bites you in the ass and your hands are shaking. All right. You got to get back and you've got to face that. Even though if you don't trade. All right. Remember, not trading is a position. You don't have to trade, but face it. All right. Maybe even paper trade. If you've got a real bad day and now you're afraid to pull that trigger, paper trade, just to build a little confidence. Okay. But that's a suggestion. But Paul, we are coming to a close here. And any last words for our wonderful traders out there that are taking notes, right? Taking notes, wink, wink, in their journal.
Yes, I have it written here. And I was just, as we're FOMO trading, and to avoid being falling into the trap, I advise traders to develop your well thought out trading plan, set clear entry and exit points, establish risk management, and avoid making impulsive decisions based solely on hype and short-term movements. It's important to maintain your discipline and stick to your strategy.
Beautiful. Yeah.
I can't say it enough. That's where discipline comes from. Everyone here, if I can do it, I have to say, you can all do it.
You got it. And look at you, successful trader, successful coach, well-loved coach, and here highlighting your group coaching.
Well, thank you, Eddie. And like I said, I tell everyone, you can do it. Have your plan.
You can do it.
You
right.
can do it.
Just like Waterboy, right? All right.
All right.
All right, Paul. Take care. Thanks for being here with us. Take care, man.
Thanks for having me. Have a good day.
Thank you. All right. All right. Boys and ladies and gentlemen, boys and girls, animals, vegetables, and minerals. We've got Jack. Jack, you're going to come on here. We were going to be doing the drawing. Now, drawing for Top Quiz. We didn't have time because we had Jared at top of the hour, so we didn't want to sort of go over that. But
No.
Presto Changeo.
How's it going, Eddie?
Jack, how's your day been?
It's been good.
I asked you that, but we've been together like all day.
Yeah, you know exactly where I've been the whole time.
Same thing here. But yes, as promised, we're going to be doing our quick pick, just like the lottery. Speaking of the lottery, I think that's it's Wednesday? I don't know, Powerball? I got to check on that. But
I'll check the line at the 7-Eleven. But what we have right here is I have my handy dandy list of all, I think like 341 people played today.
No way. That's got to be a high number.
It was, but 292 got at least one right. So I will draw from here. So wait, let me check that again. 292.
Yeah.
So we will go over to my
multiple choices. Some people not forte.
I think some people just quit, or the reason I don't include the zeros is just so that
we need a little participation. Sure, earn it.
Well, it's not just earn it. It's more so people don't spam email addresses to get a better odds of winning this. I run a tight ship here, so let me check.
You do, and we've got Joe Poos, who you've mentioned before here.
Joe Poos was in there.
Joe Poos.
The name of the one woman. I don't feel comfortable. I can't tell if it would be good for me to say it. Who won yesterday and then came in like fourth or something today.
Wow.
If she wins again, I'll just say it. It's not that bad.
Okay.
If something's really not that bad, if something's really bad, I'll DQ you. Okay, so you see here.
Tech.
We're going to generate two random integers between 1 and 291 or 292. And let's get those numbers.
All right, let's see what happens here.
Let me write these down. They are 271 and 178. So let's go back to our sheet here. All right. The first one we will see is 178.
Who is 178?
It is Theo.
Theo.
Ooh, nearly had a heart attack there. I remembered to hide the column with the emails. Not that I think people would do anything with them, but privacy. It's a good thing.
Yes, yes. So congratulations, Theo. All right, you got yourself a big gulp Slurpee at 7-Eleven.
Yeah, as I'm going through this, let me check before we reveal the last one. Let's see how Joe Poos did today. He was towards the top before.
Joe Poos were coming after you, man.
This is the name right here that I'm like, I don't know if I want to say this.
I could barely read it, but I'm not.
Yeah.
Okay.
Chansey Poo. We got like poo culture coming in strong. Okay, so the second.
Smell it from here.
The second number is 271, right? So let's go see.
271, and we've got
71. I got to reveal it slowly. 271 is Let Me Die. Well, let me die. I hope that.
Oh, geez. We don't want you gone.
I
need
think,
you, man.
I think this is good. This might be a random, this sort of unlikely thing out of 292 that Let Me Die, I am hoping, may now like to live. And that's really the goal of this whole thing is to make people appreciate the finer things in life.
Now, let me ask you something. You got one question right. With the points of 942, is that right?
Yes, because
it's a timed base.
It's a time base. How quickly you answer the question. So if you got one question right, he answered it pretty quick.
Pretty quick.
Yeah.
And then walked away.
But there's always another day for this. So my thought with doing the 10-second with the easier questions is, and once again, I'm not saying people do this, but I have no way to check, is that it makes it harder to use the Google machine. 20 seconds gives you enough time. Anyway,
sure,
we'll experiment with it.
Anyway, we're not giving away hats. We have not reached 700
well,
likes.
We got to do something better than that in the future.
Yeah.
chance at a hat. I'll figure out something. We'll do something spicy.
Oh, like maybe some Thai food?
Yeah, I'm sure. Yeah, we'll give Thai food to everyone. That would be great. With
Spicy,
that,
right?
it's time to wind down today's episode. Thank you for watching. I've been behind here for 5 hours now, 6 hours when you count the prep. So, but it's an absolute joy. You guys are a great audience. We'll try and bring on more guests that you guys suggest.
Yes, please.
But
It's been a good time.
In the meantime, as we used to say back on an old show here, I will bid you adieu.
All right.
Clearing all these layers. Namaste and trade well.
Take care, Jack. See you tomorrow.